This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to that youtube.com thing and search Bloomberg Podcast, and that's where you'll find us. Tom Keene is out today. Damian Sassower, we grabbed him off the street. We went for the big left-hander out of the bullpen. Damian, where does Tom Keene go on his day off?
I don't know. I mean, look, the bond market's closed, so, he's got nothing to do anymore. But, currencies are open, and currencies are telling you a little bit of something. We've come all the way back from some levels on Thursday of last week, so it's pretty unbelievable to see what the markets are now telling us, Paul.
All right, we got the equity futures pointing to a higher open. Kristina Hooper, Chief Global Market Strategist at Invesco. We're going to start off strong with Kristina Hooper from Invesco. So we got a lot of smart people coming up here. We've also got Lori Calvasina. And coming in from
Trantarian on a veteran Sammy
Maybe let's talk a little small cap stocks. Lori Calvasina, head of U.S. equity strategist strategy at RBC Capital Markets. Cam Dawson, CIO at New Edge. She's going to be in our studio, Damian. And then Eric Balchunas. If the Acela train is on schedule, he will be in our studios here later on this morning. So we got a lot of market folks coming up here. So we think about earnings, we think about the Fed, and we think about a new administration in Washington, D.C., and what does that mean for these markets. Let's kick everything off like we do here. Well, Lisa Mateo. Lisa, what do you have for us?
You got it. Wall Street coming off its best week of the year. The S&P 500 hitting its 50th record this year. Right now, we'll start with NASDAQ futures up about 0.2%, 60 points. Dow futures up 0.4%, 184 points. S&P futures up 0.3%, 18 points. U.S. bond markets closed for the Veterans Day holiday. I want to point out Bitcoin. It rallied past 82,000 for the first time. Thoughts of a Republican-led Congress, pro-crypto lawmakers. Right now, we have shares of Coinbase up 16%, MicroStrategy up 11%. We have shares of Tesla up 6%. Rally in shares Friday has sent the company back over the $1 trillion mark for the first time since 2022. Now, meanwhile, hedge funds that shorted Tesla, well, they've lost more than $5 billion since President-elect Donald Trump's victory boosted the stock. And Honda's new electric vehicle, well, that's quietly creeping up on Tesla. Bloomberg reporting the Prologue. It's becoming this favorite among brand loyal customers. It's also starting to win over electric curious drivers who've been waiting for a more affordable alternative to Tesla. And finally, BYD closing in on Ford deliveries after beating Tesla on revenue. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower doing his best to sit in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Veterans Day.
Veterans Day.
Big thing. Julio Feliu. Shout out to my friend Julio Feliu for his service.
You mean Ken?
Appreciate that. Ken's father is there.
Oh,
yeah.
Okay.
How about that? George Ferguson, Bloomberg Intelligence, and he was actually in Army Intelligence, believe it or not.
Really?
Yes.
Interesting.
Exactly that. So we got a lot of good folks around here. What are you looking at there, Damian?
I'm looking at the election effect, Paul. Look, the reality is this. If you look out to the end of 2026, you're looking at where the terminal rate in the U.S. is going to wind up. There is a lot of ambiguity about it. I think we're looking at something like 350, 354 by December of 2026 if you look at what Fed futures are pricing in. But, who knows how we get there? And I think that's what we need somebody like Kristina Hooper to tell us about, because quite honestly, if I look at what the impact of inflation, of the Trump win is on inflation and growth, I would actually think that the Fed might actually pause in December, but it looks like there are more cuts to come. Should we bring her in?
Let's bring her in.
Let's bring her in. Let's do it. Kristina Hooper, Chief Global Market Strategist from Invesco. Thank you for joining us here this morning. Talk to us about the Fed. Talk to us about what happens in a Trump world.
So I think the Fed was right to be very emphatic in saying that they're not going to guess, assume, speculate about what policies are coming down the pike and the timing of them. So at this point, it's all about the data and what is actually showing up in the data today. Now, there is some risk that inflation resurges. And that has absolutely nothing to do with who is sitting in the White House. And so I think the Fed needs to be super careful. And so I think the Fed is not necessarily going to cut in December. It is not a fait accompli. It's going to be really dictated by what we see released in the next weeks before the meeting. I do think there's probably some caution in terms of worrying a bit about what could happen if we see a lot of Trump policies come to fruition in terms of stimulating growth and higher inflation. But at this point, the Fed is not going to act on it. And I don't think it will until it shows up in the data or it's reliable enough in terms of the scope and the timing that they can add it to their economic projections.
Kristina, I was listening to Bruce Kasman over the weekend. He and Joe Lupton, the At Any Rate podcast at JP Morgan, we know who they are. You know, they're talking about revising up growth expectations in the U.S., revising them down in the Eurozone and China. Do you agree with that? And what is the impact on inflation from that?
Well, I don't think that that's wrong. I don't know if it's going to be as dramatic as we assume. I certainly think that U.S. growth is going to be stronger. It has been stronger. So this would just be a continuation of a trend that we've seen. And it might get some kind of boost from Trump policies. Again, we just don't know the scope. We don't know the timing. We don't know what policies they'll focus on first. I do think that the Eurozone could face some headwinds, but I do think that we're going to be seeing a reacceleration in growth there as well. It's just not going to be as strong as in the United States. So I don't think it's as dramatic a situation. I don't think there's going to be that significant a change from what we anticipated months before the election.
Well, Kristina, here's the disconnect for me. Like, I agree with you. It's going to take time for fiscal stimulus to come through. It's going to take time, quite frankly, for the tariffs to come through, right? Because he's going to use that as a negotiating tool. And by he, I mean, President-elect Donald Trump. But, sentiment is, not to be, played with, not to be trifled with, if you follow me here. I mean, sentiment can start pricing this into markets far more quickly, far more, rapidly than we otherwise expect. I mean, what's the potential for that to happen between now and the end of this year?
Oh, I certainly think there's the potential for that to happen. We're already seeing a very visceral reaction in markets. But I just want to draw the distinction between what happens in markets and what happens in the economy. We could see very well markets discount strong economy in 2025. And I'm not going to argue with that. I do think we're going to see a reacceleration in the U.S. But I do think markets have a way of reacting very, very robustly sometimes to what they think will happen. And then there's a point where markets are likely to moderate. It's not dissimilar to what we saw in 2016, where we saw a very strong rally and some retracing. So I would anticipate that's likely. But I certainly think we're going to see the exuberance in markets in a more distinct way than we will see show up in economic growth. Now, that's not to discount that psychology plays a role, that when sentiment is better on the part of consumers, on the part of businesses, they spend more. And I also think we're just going to get a bump from having election certainty. The biggest risk that was before going into the election was that we'd get some kind of challenge, we'd have prolonged uncertainty. That's behind us. And so now all those spending plans and hiring plans that had been held in abeyance by companies and all those spending plans that had been held in abeyance by consumers, that can start again.
All right, Kristina, Chief Global Market Strategist for Invesco. Where do you go globally here, knowing what we know?
So we certainly know that policies are going to be supportive for the U.S. economy, but that doesn't necessarily mean that that economies outside the U.S. are left out. Yes, we might see some headwinds in the shorter term, but I do think, as I mentioned, the European economy as well as the U.K. economy will reaccelerate next year. I think we could see a scenario where, especially if we work out the tariff issues quickly, where we see a global economy that reaccelerates. And so that means investors need to be thinking broadly. It's not just about U.S. equities, especially because valuations are so high. So within the U.S., I would add to exposure to small and mid caps because I think those will benefit very much from the environment, from Fed easing as well as Trump policies. And then, of course, looking globally, I think there's a lot of opportunity in lower valuation places, UK equities, emerging markets equities. So I think we need to be focused not just on growth, but on valuations, and that leads to diversification.
Emerging market equities. That is music to my ears.
Oh, no.
No. I'm kidding. But I would love to ask you. I mean, obviously, we can't ignore what's going on in currencies here. And we've come a long way in a very short period of time. Initially, we saw MEX, we saw the China yuan, we saw the Korean won, all depreciate on the back of the Trump victory. And then, came all the way back almost, right? In the case of the Mexican peso, it actually appreciated for a bit there. And then Friday, we kind of melted down, and we continue to be melting down here. Kristina, talk to us a little bit about what the dollar, what is it telling you here?
So what I think it's telling us is that there's a lot more to the currency picture than who is sitting in the White House. In fact, more is dictated by Fed policy. And so I think we have to recognize that the U.S. dollar is likely to weaken, but it's going to have different relationships with different major currencies. And it's going to ease more relative to some currencies than others. And that will play out over time as we see what other central banks are doing as well, in addition to the growth picture. I think it's really important to recognize that a strong U.S. economy doesn't mean that other economies necessarily suffer. So we have to just watch this play out. But to me, what it's telling us is that this is not just who's sitting in the White House.
All right, Kristina, thank you so much for joining us. Kristina Hooper, she is Chief Global Market Strategist for Invesco, giving us her thoughts on these markets. We've got, obviously, changes in Washington, D.C. We've got earnings. We're just finishing up here. And we've got a Fed that's been cutting rates. But the question is, can they do the skip? I'm not sure what a skip is.
A pause,
maybe. So we'll have to see how that all plays out here. Equity futures looking higher here. S&P up 0.3%, as is NASDAQ as well. With our news in New York City, here's John Tucker.
All right, Paul and Damian, President-elect Trump making key position announcements as he starts to form his second administration. In a social media post, the president-elect says he's going to install Tom Homan as border czar with oversight over immigration, maritime, and aviation security. And let's get more from Bloomberg senior writer Bill Ferries.
Tom Homan used to run the Immigration and Customs Enforcement Agency. He was really the guy partly responsible for this family separation policy that defined Trump's policy at the U.S.-Mexico border. He will be some kind of a border czar, which means he won't have to face Senate confirmation and can try to run things right out of the White House next to the president.
Bloomberg's Bill Ferry says Trump is expected to use those czar-like positions to concentrate power among loyalists in the White House, giving appointees broad discretion over government departments and agencies to implement his agenda. And Republicans edging closer to winning control of the House and pulling off a clean sweep with 218 seats needed to keep their majority. The AP has called 213 races for the GOP, 203 for the Democrats. The latest is Arizona's 1st district. The Republican incumbent David Schweikart held on against Democrat Amish Shah with 52% of the vote to 48%. 19 races are still in play. And Global News, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Damian and Paul.
How about that, John Tucker? We got Damian Sassower in the city.
I love the way John Tucker says my name. It's just like melts off his mouth.
Exactly.
I love it.
There might be a little snark there. I'm not sure.
Maybe. I didn't detect that much snow, just a minimal amount.
Exactly. All right, looking at the futures here, we got some green on the screen here. S&P up 20 points. The Dow up 200 points. That's about 0.4%. So we got a little bit of a lift here in pre-market trading. We're going to have more coming up for you. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global benchmark products across all major asset classes. CME Group, where risk meets opportunity. All right, we've got futures advancing. Donald Trump's victory in the U.S. presidential race continues to boost equities. Side note here, shares of Trump Media Technology up 9%. Let's get to futures. NASDAQ futures up 0.3%, 67 points. Dow futures up 0.4%, 194 points. S&P futures up 0.3%, or 30 points. The bond market closed for the holiday. We'll move over to commodities. Oil extending its biggest drop almost 2 weeks. That's due to a soft outlook in top importer China. Right now, Brent crude down nearly 1.5%, $72 a barrel. We have WTI crude $69 a barrel. Over to spot gold lower at $2,660 an ounce. Few companies making news. It's Amazon. Reuters reporting the company's developing smart glasses for its delivery drivers to help guide them to, around, and within buildings. Sources say it's going to shave seconds off of delivery times. And then we have shares of Burberry on the rise, up 4% after another report said that Montclair, the maker of those pricey puffy coats, is set to take it over. And as far as earnings this week, we'll feature reports from Home Depot, Live Nation, and Spotify. There you go. That's today, later on after the close. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene.
Hi there.
Doing the best chance he can. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So search youtube.com and search Bloomberg Podcast, and that's where you'll find us. Linda Dissel joins us here. She's just senior equity strategist for Federated Hermes. Linda, what changed for you, if anything, last week with the elections and the significant gains by the Republican Party across all halls of government? What changed for your equity outlook, if anything?
Oh, well, we went into the election thinking that it was going to be very tight. And when it became something that looked more like a landslide, it caught a lot of investors off guard. For us, we've been bullish that we wouldn't have a recession next year and that earnings would be strong. But now there's a pro-growth president coming in with kind of a mandate, and that was a surprise to us and to many others. And that has a lot to do with why the market has been trending up and dramatically here lately. And there's an excellent chance now of a melt up into year end. So we were surprised we didn't get the correction before the election. We thought maybe we'd get a correction after the election while they were fighting out who really the president was. And now when are we ever going to get the correction that we really need?
Well, Linda, I'm just a lowly fixed income guy on Veterans Day, and my bond market's closed. So I'm just going to tell you some of the headlines that I read about your equity market over the weekend. Stay max bullish equities, just the beginning for RTY. Talk to us about the reflation trade in equities. Does Russell still have it in him?
Oh, gosh, yes. In fact, if you're trying to figure out what part of the market has not been picked over or even totally picked over, small caps have been so far behind the large caps, hadn't been this far behind. And I'm talking about the profitable ones since before the tech bubble burst. So there's a lot of upside left in that area. And they were like, I don't know, 17 times multiple when the market multiple was much, much higher, maybe almost 10 multiples higher. There's a long ways to go there. So it's pretty easy to be bullish still on the small cap arena. And we're not even, I think the last number I saw, we're at 16.7 times on a PE for small caps. We're nowhere near the high. I think it was back in maybe 17 or actually 2018, it was almost 20 times multiple. Still a lot of runway there for the small caps.
Taking a step back, Linda, I just wonder, are we more early or late cycle in the equity market here?
That's a funny one. We haven't figured out what cycle we're in or what part of the cycle we're in since we fell into this COVID situation. We should be at the back end of a cycle, but we're still spending off an unprecedented amount of stimulus money out there that keeps things going. And and if you continue to see the Fed bringing down interest rates, only you can believe that they're doing it, not because we're going into recession, but because inflation was too high. That's why they did it. It's come down very nicely and apace. And if you believe all that, we have missed the recession this time, and we're more like early to mid cycle. You're bidding up the cyclicals that you would bid up early cycle, even if the discretionaries are picked over. And now finally, financials have gotten a serious bid mid cycle.
Exactly. Linda, what do you make of the earnings cycle? We're just kind of wrapping up these days. Is it enough to support these markets?
It really is enough. It was I think maybe an 8% when all things were said and done, and and that's good. It's better than what was feared. Let's say it was a good result. Importantly for us at Federated Hermes, what we look for is the outlook that is described by business leaders for their profit margins. That's what it's all about, is the profit margins and the ability to keep them up even as inflation comes down and they can't push through rising prices. And the profit margin outlook is good. So that's very, very good news. Also, the outlook for, if you will, the 493, the outside of the Mag 7 looks like their year-over-year earnings strength into next year is going to get much, much closer to that of the Mag 7, which remains strong. There's really right here, nothing not to like.
We just had Kristina Hooper of Invesco on, and she was talking about emerging market equities, and I'm curious what your thoughts are there. Just simply put, if a Trump presidency means it's going to reignite inflation globally with these tariffs and what have you, is that necessarily a good thing for emerging markets?
Well, it's a question of the offset between increasing tariffs and what that might do for an economy, and then our interest rates rising, and we have a very seriously strong dollar and the weakening of the dollar. We at Federated Hermes are overweight both in bonds and stocks in the emerging markets, where we think that they'll benefit from that. They'll also benefit from interest rates by central bankers coming down throughout the world, because these companies in emerging markets need to borrow a lot more on a shorter end basis. So they're and they're inexpensive as well. So they're kind of really looking good as long as you don't see a global recession. And that's what we're all trying to avert around this world. Then you can be bullish on that sector. Again, one that has not been picked over.
We have inflation coming in on or later this week. It's a big print. It's one of the two we're going to get before the December meeting at the Fed. And I'm just reading your report here, and you said the price of a potato chip, yes, it's stabilized, but at a price level that's 50% higher than pre-COVID. Talk to us about the impact of higher prices on the U.S. Economy and, more broadly speaking, the global economy.
Yeah. 50%. I always say that when I tell people. I love that chart, because who doesn't like a potato chip? And what it reminds us is probably the absolutely real reason why Trump won was because, and why all around the world, in companies like the United Kingdom and in France, Japan, India, South Africa, these countries have seen their incumbents hurt really, really bad. Because if you are the leader of a country that is suffering inflation, your administration is going to get blamed for it. And if you say, but the rate has come down, those have to go buy groceries. It's one word, groceries. I have to go buy groceries. Why won't these prices come down? You said inflation was coming down. Well, that is not the same thing. And if you were not around 40 years ago, which I was, to see a terrible inflationary environment, prices don't go down, they stabilize. And that was a sticker shock that we've got to get used to here.
Linda, 30 seconds left. What's the sector that screens well for you guys at Federated Hermes these days?
The sector that screens the best for us is the energy sector. It is unbelievably inexpensive. It's a cyclical sector. It's been recently left behind, and the cash flow that sector generates today makes it extremely inexpensive, and even on an historic basis versus the rest of the market. If you can get past potential worries about capital expenditures that may have to rise over there, you've got an exceedingly cheap sector of the market. And if you want to go defensive, I want to make a shout out to the defensive sector with dividends. Nobody still cares for them. People are looking over there for the inexpensive healthcare areas. Two really cool sectors.
All right, Linda, thank you so much. We appreciate it. As always, Linda Dissel, Senior Equity Strategist at Federated Hermes. Looking at oil, Damian, WTI crude oil, we're now back below $70 per barrel.
Drill, baby, drill. That's all I can say to that. But look, what's interesting is if you just look at price action, from a strategy perspective, low vol obviously in equities has done well, but quality has bounced back. So if you have like a long short equity quality overlay, you've done pretty well in the last few days.
S&P futures up 21 points. That's 0.3%. Same for NASDAQ, up about 0.3%. 10-year Treasury. The bonds are not trading. Why are we at work? Why are the equity folks at work in the bond market? They're smart people. The folks in the fixed income are a little bit smarter than us. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing. This as traders focus on U.S. inflation data this week. Also, its potential impact on the pace of Federal Reserve easing. Now, you had Minneapolis Fed President Neil Kashkari. He said policymakers want to be confident inflation is heading, quote, all the way back to the 2% target. He also said a strong economy could lead the Fed to cut rates less than previously expected. On Wednesday, we get the Consumer Price Index. Right now, we have NASDAQ futures up 0.3%, 81 points. Dow futures up 0.4%, 187 points. S&P futures up 0.3%, or 22 points. The bond market closed for the Veterans Day holiday. We move over to currencies right now. The dollar stronger, Japanese yen weaker, euro, British pound weaker. We have Bitcoin up more than 2.5%, passing 82,000 for the first time. Shares of Nvidia up 0.5%, but the money manager who's been called by the UK press as Britain's Warren Buffett, he's saying he's skeptical about the run. Terry Smith said the hype is overblown. And then you have TSMC. They were told by the U.S. to halt shipments of some advanced chips to China starting today. That's according to Reuters. That's a Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast. ECO, the economic calendar. We got some inflation data coming up this month. Right?
Some Fed speak also.
Wednesday, we got CPI. Thursday, PPI. And then Friday, one of my faves, retail sales. Tell me how the consumer's doing. So we got a lot of economic data here. Let's talk to an economist. Jennifer Lee, Senior Economist and Managing Director at BMO Capital Markets. For those of us that have been in the business for a long time, that's Bank of Montreal, BMO. Jennifer, thanks so much for joining us here. What do you think we're going to hear on the inflation front this week when it comes to CPI and PPI?
Well, good morning, and thank you very much for having me on. So, this is sort of going to be one of those, I think, run-of-the-mill sort of inflation reports. We're looking for a little bit of an uptick of about 0.2 for the headline and 0.3 for the core. But I think for the core measure is what we're going to be focusing on, and it's still going to be firmly over 3%, which is still showing that it's still potentially very sticky, or a little bit sticky at least. And it's just another reminder for the Fed that its job is not finished, and it's going to have to continue to cut rates because you don't have to be at such a restrictive level at this point. But we are still looking for a number of rate cuts to come. But we've actually trimmed it by one move. Just because we don't know what's going to happen with all this new stimulus that's coming down starting in the new year. So we're looking for another maybe 4 rate cuts starting in for 2025 alone.
Jennifer, not a lot of people saw the red sweep coming. I'm curious, in the wake of Trump's win, are you reevaluating your growth estimates for the U.S., Europe, and Asia writ large?
So yes, I mean, I think we were almost everybody was expecting a Trump win, but not a sweep as what we are probably looking at right now. But we actually had been already bumping up our Fed or our growth forecast for the U.S. in particular. Just a few weeks before that already, with the latest retail sales report last month, we bumped it up by 0.2, and we did it again recently just because of the win. So now we've got, oops, just dropped my pen there. So we've got about 2.2% next year, which is up from about 2.1, I think, what we had previously. So just bumping it up a little bit. We're looking for probably some near-term bump up in growth, just from better confidence, stronger confidence on the consumer front, on the business front for sure. And some of these tax cuts probably won't start kicking in until the latter half of 2025, but probably start seeing things filtering in throughout the year. Now, for Europe and for Asia, China, we're a little bit more hesitant. We haven't touched our growth forecast. We're still looking at something under 5%. Rounding, you can still say it's about 5% still, so it's about growth target. It's around the growth target, the official growth target. But they're really struggling already, with the property sector still in a deep slump. And now with these impending tariffs coming next year, they're in for, I think, another tough run. So we're probably going to have to see more fiscal stimulus coming from the Chinese officials. And with Europe, they're still struggling as well, politically as well. It's hard to get any policies through right now, for sure. And Germany is the ones that's taking the biggest hit right now. So we're not looking for a recession, an outright recession, but I think it's very, very close at this point.
Well, I guess that takes me to my next question, the collapse of the German coalition government, right? I mean, the emergence of Friedrich Merz, and what does this all mean? I mean, we saw some, swap spreads have narrowed quite considerably in the Eurozone, and we've seen a flattening of the curve. I mean, talk to us a little bit about, how those expectations flow through into the fixed income markets in the Eurozone.
So Germany has been taking the biggest hit out of all of the big euro area economies, just given that its reliance on manufacturing. It's still heavy reliance on combustion fueled, cars, and its slow transition to EVs. So it's been basically buying a lot of the inputs, I guess, from China. And now with trade tariffs or trade wars between Germany and the rest of Europe against China, that's not helping Germany's case at all. And now, as you pointed out, with the collapse of the government, we're probably looking at another election coming up early in the new year. And who is going to take the reins? That's another question. We've got the Green Party's Habeck, who's trying to lead the way there, but he doesn't have a very huge popular stand right now either. So it's going to be tough to see who is going to take over, given that a lot of the parties right now don't have exactly a huge showing. So this is why we have this coalition government stepping in. And again, now we have to look at the fiscal side. They need to spend money, but they've got this debt break, this rule of the debt break. And somebody has to give in and say that we have to actually loosen up that rule a little bit in order to spend a little bit of money to help the German economy move forward. So this is going to be a very rough year, I think, and it's going to have to be a lot of soul searching amongst those in the government to figure out what they want to do.
Jennifer, we're going to get retail sales at the end of this week. What's your view of the U.S. consumer here?
I am still going to say, despite how the vote fell out, I still think that the U.S. consumer is in decent shape. It all goes back to the job market being still quite strong, just over 4% jobless rate, 4.1% jobless rate. Wages are still rising at a steady pace, 0.4%, 0.5%. We're talking about just broadly speaking, wages and salaries. And that's certainly helping the U.S. consumer stay on a strong footing. And we already saw a number of months now of stronger retail sales, stronger consumer spending on the PCE front as well. So that, I think, is encouraging news. Now, we're not going to expect every single month to be higher and higher and higher, but certainly I think the overall trend is showing that we're still in pretty good shape, and this is what's going to also help the U.S. economy. And we already were saying this before the election took place. And now with potential tax cuts coming down starting next year, this is going to help put the U.S. consumer in an even better position, especially with the U.S. equity markets rallying, as we have seen over the last week.
Yeah, we do see that U.S. retail sales print. We also see some activity data out of China as well as Japan GDP on Friday. Talk to us a little bit about Asia, some of the things you're seeing out there.
So China, again, the struggles that it's facing with weak consumer demand, and everything comes back to the property market, given that for household balance sheets, your house is worth it takes up the largest share of the balance sheet. So when you see the value of it declining on a month after month basis, it sort of hits consumer confidence. No one's out there buying a lot or traveling that much. So that's where the Chinese government still has to deal with the consumer and the consumer health, which is a complete opposite of what we're seeing in the U.S. Now in Japan, we're still seeing the one thing that is going for Japan right now is the fact that the yen is, it's weaker, I guess, in which it's helping exports, but it's certainly not helping the price for energy because Japan is a huge energy importer. It is purely an energy importer, so that doesn't help the energy prices at all. So, but the thing is, we're still seeing stronger production, broadly speaking, on the auto front, even though there have some struggles with some scandals on certification basis. But we're still looking for Japanese growth, but still also very soft, I guess, just sub 1% growth, I think, for this year that we have.
Jen, you're up there in Toronto. Give us a sense of the Canadian economy. How are things up there for you guys these days?
So we continue to, we're always saying, we're still growing. So that's, that's a plus, but we are also growing at almost a halting pace. It's like up 1 month, down another, or flat in another, but we're still seeing some growth. And ultimately, and then of course, now we've got these potential trade tariffs coming as well from the US. So that's one big source of uncertainty, I think, right now for Canada. Our consumers are still dealing with high rates, which is why, and the housing market is still suffering as well. Although we are starting to see a bottom, and it's certainly helping that the Bank of Canada has cut rates a total of 125 basis points so far this cycle, which is one of the most aggressive moves out of all the major central banks. Sweden just caught up with us with their latest move, so they're also at 125 basis points worth of rate cuts so far. So that is certainly helping. But again, as long as the U.S. economy continues to be strong, that's what ultimately matters most for the Canadian economy, is that strong U.S. economy means potentially a stronger Canadian economy as well.
Well, Jennifer, when I think of the Canadian economy, I think of a small, open economy with a high beta of the global manufacturing sort of cycle, and when I think of Europe, I think of a similar country like Sweden, right? So talk to us a little bit about these kind of, economies and how they should fare in an environment where, my goodness, the threat of tariffs looms large. I mean, what happens next for the Canadian dollar, for Stokie, for some of these other ones? I think of Kiwi. What are your thoughts?
So especially with the Canadian dollar, this is, we've already been taking a big hit. We're almost at about, we're just under 140 right now. So the issue right now is that the Bank of Canada is cutting rates so quickly, at a much more quicker but faster pace than the Fed. And now the Fed potentially, again, like I said, we took away one of our Fed rate cuts for next year, just on the back of potential higher inflation. So we have a more aggressive Bank of Canada, less aggressive Federal Reserve. So that's going to be another weight on our Canadian dollar. And I think that's sort of like the basis for all the other major currencies that we're seeing around the world right now, because ultimately, it's going to be how the U.S. economy fares relative to everyone else. So if everyone else is weakening, you're going to see weaker currencies versus the greenback itself. So this is one of the harder parts. And then, of course, it's going to be inflationary as well. Right. So it's almost like a double-edged sword at that point.
Jennifer, thank you so much for joining us. Always appreciate getting a few minutes of your time. Jennifer Lee, she's a senior economist and a managing director at BMO Capital Markets with our news in New York City. Here's John Tucker.
All right, Paul and Damian, President-elect Trump moving quickly to fill in key positions for his second term. He's already tapped someone from his first administration to lead his efforts at the border. Let's get more in this report from Bloomberg's Gina Cervetti.
The president-elect says he'll name Tom Homan to be his border czar. Homan is a former acting head of U.S. Immigration and Customs Enforcement. In Trump's first term, he became the public face of the president's zero-tolerance approach to immigration, which included separating thousands of undocumented children from family members. But Homan recently told CBS News Trump's plans for a mass deportation in his second term won't mean a mass sweep of neighborhoods. Homan also took part in the Heritage Foundation's Project 2025. Trump tried to distance himself from that project during his campaign. Gina Cervetti, Bloomberg Radio.
And Donald Trump also turning to a key member of leadership in Congress to be his next UN ambassador. The president-elect telling the New York Post he's naming New York Congresswoman Elise Stefanik to the position. More on that from Bloomberg senior editor Bill Ferries.
Stefanik has been a real loyalist over the past couple of years for Trump. She was one of the first members of Congress to endorse him running for a third term, and she was one of the Congress members who voted against his impeachment. So someone who's been a very vocal supporter of him.
Bloomberg's Bill Ferry says Stefanik is currently the fourth-ranking Republican in the House. And President Trump also appears to be moving quickly on foreign policy. According to the Washington Post, the president-elect speaking with Russian President Vladimir Putin last Thursday, and Trump reportedly urged the Russian leader not to escalate the war in Ukraine and hinted at follow-up conversations on resolving the war soon. And Republicans getting closer to holding onto the majority in the House. Right now they have 213 seats to the Democrats, 203. It takes 218 to control. 19 races still left to call. There was a wicked mistake on the packaging of Mattel's Wicked movie dolls. Mattel mistakenly printed the link to a pornographic website on the back of the packaging for the dolls, created in partnership with Universal Studios. Global news, 24 hours a day. Damian's over there taking it down whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul, Damian, Lisa.
All right, John Tucker, thank you so much. We appreciate it. Damian, what are we doing with your New York Jets? I have no idea what
it was such an awful day for New York sports. Let's just be clear. It's not just the Jets, it's the Giants, it's the Knicks. I mean, and look, for me, I've got a son who's at University of Miami. They just got knocked out of the top 5. I'm a Vanderbilt alum. They got knocked out of the top 25. I'm feeling it this morning.
Feeling it this morning. Yeah, I don't know what it's a rough day in New York sports, so we'll stay on top of that, of course. Futures, at least they're higher. S&P up 25 points. That's 0.4%. We'll take that. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. The surge in stocks, showing no signs of easing. Futures advancing, but J.P. Morgan says it could be a struggle to sustain their rally beyond year-end if benchmark U.S. yields approach 5%. Let's get to NASDAQ futures up 0.4%, 97 points. Dow futures up 0.4%, 202 points. We have S&P futures up 0.4%, 26 points. The bond market closed for the holiday. We move over to tech, where shares of Palantir, they're up more than 3%, and that's after a big AI move. Cisco Systems shares up 1.5% on an analyst upgrade from JP Morgan. And finally, to the auto industry. If you're shopping around for a used vehicle, you could be in luck. Carvana's CEO, it's telling the Associated Press that price declines, interest rate cuts should make used vehicles a little bit more affordable. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here on our Bloomberg Interactive Brokers Studio, streaming live on YouTube as well. Damian, What is the currency trade in your world these days?
Well, I mean, look, it was a lot of people looking at Brazilian real because it's one of the few economies on the planet where, the forward market is pricing in rate hikes, not rate cuts, right? But now I think a lot of that goes out the door. I mean, I genuinely believe, with the Trump victory here, the impact on inflation, on growth, not just in the U.S., but abroad, I mean, it is going to have it's going to make central banks take pause, quite frankly. And I think that, it's not the time to receive in emerging market currencies just yet, but you've got to look at some of these. I mean, like Brazil has 200 basis points of tightening priced in between now and next year, Paul. I just don't see how they get there.
Brazil, there you go.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
All right, folks, your daily look at the front pages around the world is brought to you by Interactive Brokers Portfolio Analysts. Consolidate and analyze all your financial accounts in one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free PA. Lisa Mateo, front pages in the newspapers. What's going on out there?
All right. Have either of you ever taken a cruise to like Norway or like some of these cold Arctic like destinations?
No, but
No?
I'm thinking about it.
You are?
I'm thinking about
Okay.
a cruise coming up in the fall.
Okay, so here's the thing. Okay, travelers are paying. Well, I don't know if you're going to pay this, but $10,000
Whoa.
for a 7-night stay on this luxury vessel. You see whales, walruses, polar bears, right? But climate change. This is from the Washington Post. They say it's starting to change things. The rapid ice melts. It sparked this polar cruise boom. Like more people going because it's opening up these easier paths for the boats to get in and around. It's extending the season, but at the same time, it's also melting the attractions that people want to see. So you have certain places where they may not be having these cruises for very long because a few decades from now, they might not be there. So that's a change that they're starting to see, but it's pretty pricey.
I mean, I've never been on a cruise, to be honest with you. I mean, Lisa, I mean, talk to me about, that whole beauty of being on a cruise in a post-pandemic environment. And they still have the buffet special with an unlimited shrimp cocktail. I mean, that's just so healthy.
I have not done one yet. I know. I've been meaning to, but I'm telling you, it's the Arctic is the way to go for a lot of these. That's what they're saying. But
it's the experience.
Charlie Pellet is our cruise person.
Oh,
He's our
that's
expert.
right.
Yes.
You got to ask him if he's been on,
he'll cruise
on the Norway cruise.
anywhere. Like he takes a cruise to go see the oil rigs in the northern Atlantic. Like there's 3 people on the cruise ship, and he's one of them. So anyway, that's our Charlie Pellet. What else you got?
All right. So have you been to any of your kids' parents' weekend?
Oh,
I know you have a son. You have a son too that's in college. Well, now more parents are actually joining in on the festivities. We're talking Jell-O shots, beer pong, flip cup.
No,
They're
thank
taking part in
my
all the
goodness.
festivities. This is in the Journal. A lot more parents, they say they want to party. Their kids say that they're cool with it. They start drinking at 8:30 in the morning because, the football games start at noon. And the thing they do say they pass on is the cheap beer. So they bring their own mini bottles of Tito's in their little fanny packs. So they bring those along.
That I can relate to, but I mean,
put their own little, cocktails in their water flasks. But some parents, you have the flip side. Some parents are saying, no, it's not right. Like, you got to be a parent. So
Miami didn't have Parents Weekend this weekend, but Tulane University did. And, shout out to Robin Hoberman, Little Kings Lane, Rybrook, New York. I got a picture of her on a mechanical bull this weekend. So let's just be clear, you're never too old to get on a mechanical bull in New Orleans.
So, I mean, parents are getting into it.
Parents
Well, they're probably
are
like,
really-
hey, I'm paying a good amount of money. I'm going to go down and enjoy
or
this
a lot of them are
Parents'
saying they want to relive the golden years.
No,
maybe
no, thanks.
You got to bring along the Tums. I'm saying if you're going on a trip like that. This is something right up your alley, Paul. So this is in Bloomberg Screen Time newsletter. Has a look inside Netflix's move into live programming. So we've been hearing more about it, right? The past couple of years, live cooking shows, tennis match, hot dog eating contest, comedy special, football games, wrestling, and in a few days you have that boxing match between Jake Paul, Mike Tyson. That's the big draw. But some people are saying it's weird because Netflix kind of created this streaming service as an alternative to live TV, but it's all about advertising. Like a lot of its customers pay more to avoid the ads, but with live programming, they can put the advertisers in front of all the customers.
Right. That's, I mean,
no matter
sports
what.
is kind of, when you think about the ad dollars, shifting from traditional media broadcast networks, cable networks going to streaming, it's just a matter of time before these streaming services
I mean,
get into sports.
This is right in your wheelhouse, Paul Sweeney. And I mean, for me, Netflix is just eating everyone else's lunch. And we have Walt Disney earnings coming in on Thursday.
Yep.
You know Walt Disney better than most. I mean, what do you expect out of that? I mean, it's...
Yeah, I mean, Walt Disney Company's become basically a theme park company. That's, more than half of their operating profit. And so we'll have to see. But again, they're trying to navigate the migration to streaming. All I know is I did not watch the Penn State game, the whiteout game on Saturday evening because it was on Peacock. I'm like, I'm just not going there. I mean, I got enough things hitting my credit card. I'm not going to Peacock to watch Penn State. So, but Dan Ives was there, by the way. Yeah, exactly. Out of principle.
Out of principle.
Exactly. What do you have?
All right. So we talked about, the parents living it up at colleges, drinking up. But now we have winemakers. This is on the flip side. They're going to the younger, health-conscious drinkers. So they're making more wines with less alcohol and fewer calories. You've seen the popularity, right? The hard seltzers really got it. But the Wall Street Journal is saying, okay, overall wine sales, they've declined for a third year in a row. But you have the light wine category. It's actually increased $209 million in sales 2024 from $16 million in 2019.
Light wine?
Light wine.
I
They're
didn't know
about
you could do that.
$15 a bottle.
Okay.
It goes about 80 calories as opposed to 120 calories. It's usually white wine because the red wine is a little bit tougher because it already has more alcohol and more sugar in it. But they do it. They don't just add water. So they're not just diluting it. They're using this distillation process to remove a portion of the alcohol. But some people are saying they don't like the taste. I don't know.
All right. So this company in Woodville, Washington, the state of Washington, the company removes alcohol from 30% of the finished wine and combines it with an unaltered wine to preserve the taste. About a quarter of buyers become return customers according to the survey.
Paul Sweeney, I'm 50 years old, and for the better part of my life, people were trying to figure out how to inject more alcohol into a sip of into a beverage, and it's kind of like the rest of the world. The U.S. we've been on a globalization path. Now we're getting more into a nationalistic path. We're sort of cutting off our relationships with everyone, and now we're cutting off all the alcohol. I'm stressed. I just don't even know what to do.
I don't know what to do.
Well, I don't mind the idea of it, because then you can have like a second glass without feeling guilty.
How is that?
It feels guilty. I mean, first there's light beer, so I guess why wouldn't there be a light wine?
Yes, but it's usually the white. The white wine is easier. But yeah, that's the new trend. I'm gonna have to check it out.
I doubt we're gonna get a light Jameson.
No, not happening.
My friends over in Ireland. Yeah. No. So all right, Lisa Mateo with the newspapers. Thank you so much. We appreciate that. There's a lot of disturbing news there, Damian. I mean, the light wine kind of is gonna stick with me for the day.
I'm shaking. I'm still shaking.
Yeah, but the $10,000 Norwegian cruise, I've never cruised because I just, I'm sitting in a port somewhere down in the Caribbean and I see these huge ships pull in and these massive people come off. I'm like, there's no way I'm ever going to do that. But if you want to go see a lot of stuff, I've been told
it's the way to go.
That's the way to go. Particularly, I mean, like we went to Ireland this couple months ago and we did the tour, the bus tour.
That's right.
So I was with a bunch of, Midwestern retaillees, and many of whom live in the villages, by the way, down in Florida, which is a story in and of itself for dinner time. But it was a great way to see stuff. I don't know.
No, look, I definitely agree. Looking at stuff from the water, but the middle of the ocean is a little bit, and the Arctic Ocean at that. It's rough seas out there. I get a little bit seasick, but a river cruise, maybe along the Amalfi Coast, and a nice little something or other. I mean, that makes sense to me. Sure.
Yeah, we'll see how that goes. So anyway, we're planning that for the fall. We'll see how that comes out. S&P futures up 25 points. That's 0.4%. The Nasdaq also up about 0.4%. The bond market closed. I'm not going to give them any love at all today. The bond market's closed. Here's some tunage for you. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Coming up in this hour, Zach Cohen. He's a reporter for Bloomberg Government to get the latest on the House and Senate races. We still got some House races that are still being counted. I don't know how that works. Matt Miskin, co-chief investment strategist at John Hancock Investment Management, discusses warnings from the bond market. And then in studio for Ian, we got Nick Stadtmiller, head of product at Global Advisors. He discusses EM opportunities for you, Damian. So we're going to talk a little EM.
Love it.
So I'm just going to sign off to you. You can go do your whole EM discussion.
Go up to the 6th floor, get some chips.
Exactly. I'll get some chips. I'll get some. Damian Sassower's in for Tom Keene here today. That's all. That's the best we could do, folks. Damian, but he's in here. He's doing a great job. We appreciate him coming in here for Tom Keene. Tom's got 2 days off this week.
You want to know? I'm sitting in Tom's chair just now, Paul, and I just wanted to use this Purell, and I put some on my hands, and I don't think he's ever used it because it just exploded all over my shirt, and so I'm just letting you know, Tom, it's just
We're
happened.
surviving.
I smell
here.
like alcohol right now.
We're in survival mode
Good
here
alcohol.
in the Bloomberg
Purell.
Interactive Broker Studio. Lisa Mateo has got a Bloomberg Business Flash. What do you got, Lisa?
You got it. We got Wall Street coming off its best week of the year. The S&P 500 hitting its 50th record this year. We have NASDAQ futures right now up 0.4%. 101 points. Dow futures up 190 points. S&P futures up 26 points. U.S. bond markets closed for the Veterans Day holiday. Got to point out, Bitcoin rallied past 82,000 for the first time. Thoughts of a Republican-led Congress with pro-crypto lawmakers. Right now, it's at 82,278. Want to check in with some crypto-sensitive stocks. For example, Coinbase up 15%. MicroStrategy up about 9%. Then we have shares of Tesla up 7%. Elon Musk's electrical vehicle giant, well, it's reaping the benefits of the so-called Trump trade. A rally in shares on Friday. It sent the company back over the $1 trillion mark for the first time since 2022. And Honda's new electric vehicle, well, that's quietly creeping up on Tesla. Bloomberg reporting the Prologue. It's becoming this favorite among those brand loyal customers. It's also starting to win over electric curious customers who've been waiting for a more affordable alternative to Tesla. And BYD closing in on Ford deliveries after beating Tesla on revenue. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on that YouTube thing out there on the internet. Bloomberg Surveillance today. It's brought to you by Cohen Resnick, Advisory, Assurance, Tax. Discover optimization strategies that are helping CFOs make their finance function more competitive and resilient. Talk to Cohen Resnick's Advisors today. Let's check in with Zach Cohen, congressional reporter. I don't know what he's doing down there. I mean, Zach, you still have some House races that have yet to be called. Where are we? What's going on with those things?
Sure. Republicans are certainly the driver's seat at this hour. They've netted at least 3 seats, picked up a number of others, but Democrats have also flipped a couple of seats for a total of +3 at this juncture. Obviously, the magic number to watch is 218 on Bloomberg.com. And right now they're hovering at around 215 at least. And so they're really on the margin here. There's a couple of outstanding races, mostly west of the Mississippi River, many of them in California, some in Iowa, Arizona, Alaska even. And so as those ballots continue to come in, especially mail-in ballots that can arrive after Election Day, those need to be counted before some of these closer races can get called, and whether we find out whether, in fact, Speaker Mike Johnson gets to keep the gavel.
Zach, we're starting to see some announcements out of the White House this morning. Elise Stefanik, for example, talk to us a little bit about Trump's cabinet. What can we expect to hear over the next few days, weeks? I mean, talk to us about U.S. Treasury Secretary.
Yeah, so certainly Elise Stefanik, the Republican from New York, being tapped to be the ambassador to the United Nations, replacing Nikki Haley, who obviously ran against then former President Donald Trump, now President-elect Donald Trump, and probably was not going to get that role again. This is somebody who sort of worked her way up through the Republican ranks, started off as a real moderate representing upstate New York, and eventually became what she would call ultra MAGA, very aligned with the Trump movement, and that seems to be paying off for her. All of Trump's Senate confirmable appointees will need to go through the Senate confirmation process. However, he's been asking the next Republican leader, whoever that might be, whether it's John Thune, John Cornyn, Rick Scott, to kind of waive that process entirely and allow him to install cabinet and other appointees through what are called recess appointments, which are allowed under the Constitution. It remains to be seen whether Congress would allow that procedure, that expedited procedure. But all of that is going to need to happen pretty quickly come January.
Zach, give us a sense as we step back and look at this holistically. How much of a red sweep has it been for the Republicans? And in fact, what can President Trump get done here, given that he has control of the Senate, appears to be at or close to control of the House? How much of a red sweep is it really?
I mean, the fact that Trump was able to carry all 7 battleground states with the addition of, I believe, Arizona late last night or early this morning certainly indicates that this was a Republican, maybe not a wave, that we're sort of past the era of wave politics. The fact that we're talking about a Republican victory potentially in the House that'll be determined by just a handful of votes, just given the fact that gerrymandering and partisan sorting, people voting with their feet to places like California or Florida, depending on their politics, really makes it hard for either party to win the kind of results that we saw back in the day where, Reagan would be able to win 49 out of 50 states without batting an eyelash. But certainly the fact that Trump will come into power, certainly with a Republican-controlled Senate, means wonders for his efforts to overhaul the federal bench. He'll be able to appoint judges not just to the Supreme Court, but also to lower appellate courts and federal district courts, some of those benches that make up the vast majority of federal litigation. And so certainly either through recess appointments or through actual confirmation, he's got some power there.
Thanks, Zach. Tom Horman's been announced as the border czar, and I'm looking at, what many believe Trump is about to embark on the largest deportation program in U.S. history. Talk to me about that announcement, that appointment. What do you expect out of that?
Certainly, I have to check if he was actually nominated to be Secretary of Homeland Security, which is subject to Senate confirmation, or if this is sort of a czar-like position where he's named, but with that, with sort of limited power to promulgate regulations that be able to do the kinds of things that Trump is talking about. Some of this can be done via executive order. I would expect, within the first couple of days, we see some of the return to Trump-era policies around remain in Mexico or catch and release, so to speak. But certainly, Homan and others are going to have some pretty vast power under existing statute to change current immigration law, whether a Republican-led Senate, even a potentially narrow one, if Dave McCormick doesn't hold on in Pennsylvania, that race has been called, but apparently is too close to call for some Democrats, then maybe we could see a confirmation fight if Susan Collins and Lisa Murkowski have some concerns about any of these picks. So that'll be worth watching as well.
Zach, what's the to-do list for Congress right now?
Certainly got to figure out government funding that expires in December, so we get another shutdown fight on our hands. If you've got Democrats who are hoping to lock in federal funding levels for at least the first 9 months of the next Trump administration, and there'll be probably some Republicans as well who'd want to go along with that, just to sort of clear the plate and allow Trump to come in, set budget levels, and come up for his own spending plan for the next couple of years. Although some Republicans certainly will want to hold off on that decision in order to give the incoming Trump administration the ability to set funding levels for the current fiscal year that started September 30th of this calendar year. We'll likely see a defense authorization bill, a military policy bill that passes every year and has for the last 60 some odd years. That's usually a pretty bipartisan affair. And certainly Democrats are going to want to confirm as many judges as possible to the federal bench while they have unilateral control of that process. There's a number of vacancies, not at the Supreme Court level, obviously, but for lower appellate levels and at the district courts that they could see done with a simple majority, even if Trump wants them to hold off on that.
Zach, the U.S. fixed income market is closed today, but the bond market vigilantes are far from dead. Talk to us about Treasury Secretary Howard Lutnick. Is it going to be John Paulson, Glenn Youngkin, Scott Bessent? If you're a betting man, where do you place your bet?
It entirely depends on not just obviously who Trump wants as his Treasury Secretary, to be the primary ambassador for the American economy overseas, as Janet Yellen has done, but certainly what the market will bear in the Senate. As I mentioned, senators are coming in, Republicans with 53 seats most likely, assuming this result in Pennsylvania holds, and having flipped seats in West Virginia, Montana, and Ohio. And so that gives them a pretty sizable majority to be able to confirm really whoever Trump wants in that job. And I could see somebody confirmed by January 20th. Remember, Congress comes in January 3rd, and that's the beginning of the new Congress. Then there's a number of days before the inauguration of the next president on January 20th. So it's not unusual for the Senate to start confirming nominees for a president-elect, so that way they can come in with their team in place. And I would imagine Treasury Secretary and other cabinet appointees would fit the bill on that one.
Hey, Zach, thanks so much for joining us. Really appreciate it. Zach Cohen, he's a congressional reporter for a Bloomberg Government down in Washington, D.C. Again, we still have some House races where we still have some votes being counted. I don't know how that works. I think some technology would come into it at some point, and we would have these things in more real time. But there you go. So waiting on some races in California and some other states, as Zach was reporting. With our news in New York City, here's Michael. Here's John Tucker.
Thanks. President Biden will host President-elect Donald Trump this week at the White House for their first post-election meeting. Let's get more in this report this morning from Bloomberg's Charlie Pellet.
It sets in motion the transition of power that will be completed in January. The Oval Office meeting will come Wednesday morning at 11. Last week, Biden pledged to help ensure a peaceful transfer of power in January and called for healing divides in a politically polarized nation. In New York, Charlie Pellet, Bloomberg Radio.
And President-elect Trump has named Tom Homan as his border czar. The former acting ICE director was the face of zero tolerance in the first Trump administration. Trump has also picked New York Congresswoman Elise Stefanik to be his UN ambassador. Well, Republicans are now 5 seats away from reclaiming their majority in the House and pulling off a clean Washington sweep. Arizona Republican Dave Schweikert's race is the latest to be called in the GOP's favor. The Kremlin denying a Washington Post report that Trump spoke with Vladimir Putin last week. The paper says the president-elect urged the Russian leader not to escalate the war in Ukraine in a call 2 days after the election results. FTX filed a lawsuit against Binance Holdings and its former chief executive. They are seeking to claw back almost $1.8 billion it alleges was fraudulently transferred by the now jailed founder Sam Bankman-Fried. The lawsuit is one of many filed by FTX against its former investors, affiliates, and clients in the Bankruptcy Court of Delaware. Other defendants include the former White House communications officer, Anthony Scaramucci. And as United Nations climate negotiations start in Azerbaijan, the chief issue is who must ante up to help poor nations, and especially how much. But this year's talks, known as COP29, won't be as high profile as last year's, with 48 fewer heads of state scheduled to speak. The leaders of the top 2 carbon-polluting countries, that will be China and the United States, they'll be absent. The Wisconsin Supreme Court is going to hear oral arguments today on whether a law that legislators adopted more than a decade before the Civil War bans abortion and can still be enforced. But abortion rights advocates stand an excellent chance of prevailing given that liberal justices control the court now. One of them remarked on the campaign trail that she supports abortion rights. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Damian, Paul, Lisa.
All right, John Tucker, thank you so much. We appreciate that. Damian, what's the call on Brazil these days?
I mean, look, I think, when you look at Brazil, you have to look at it relative to the other high-yielding emerging market economies that are out there. So Mexico comes to mind. I mean, if you look to Asia, you're probably looking at India and Indonesia. But, my goodness, the Selic rate, which is their policy rate, akin to the Fed funds here in the U.S., is something on the order of 11, maybe even 11.25%. I mean, so you're in a very, very different world out there. Inflation is a real issue. Their fiscal deficit is a real problem. And they can't print their way out of it like we can here in the U.S. So that's the issue when you're looking at Brazil. But certainly if you look at Brazil relative to Mexico, maybe in that type of a relative value sense, there are some issues there with Mexico being, so close to the U.S., the whole friendshoring argument being thrown out the door, dumping from China. It could be some real risk for Claudia Sheinbaum and the folks down in Mexico.
Very good. Interesting. Again, looking at the DXY index, we've got the dollar stronger yet again today. We're 105.5 for the DXY index. So some strength against some of the major currencies around the world. WTI crude oil below $69 per barrel. I'm calling that out for Alex Steele. I know she's listening. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures advancing as Donald Trump's victory in the U.S. presidential race continues to boost equities. On a side note, shares of Trump Media and Technology up about 8%. We have NASDAQ futures up 0.4%, 87 points. Dow futures up 194 points. S&P futures up 24 points. We have the bond market closed for the holiday today. We'll move over to commodities where oil extending its biggest drop in almost 2 weeks. That's due to a soft outlook in top importer China. Right now, we have Brent crude down nearly 2% at about $72 a barrel. WTI crude $68 a barrel. We have spot gold lower, $2,656 an ounce. Few companies making news. Cigna saying it will not pursue a combination with rival insurer Humana. We have Cigna shares up 8%, Humana down 6%. Reuters reporting Amazon developing smart eyeglasses for its delivery drivers to wear to guide them to, around, and within buildings. Sources say it'll shave seconds off of delivery times. And shares of Burberry, they're on the rise, up about 4% after another report that said Montclair, that's the maker of those pricey puffy coats, well, they are set to take it over. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. All right, the election, it's in the rear view. I guess markets can focus on fundamentals, earnings, interest rates, economic growth, all that kind of stuff. Let's check in with somebody who does this stuff for a living. Matt Miskin, co-chief investment strategist at John Hancock Investment Management up there in Boston. Matt, as we kind of reset a little bit here post-election, what's your theme when you talk to your clients out there these days?
Focusing on the fundamentals, Paul, because right now we are seeing a massive sentiment change, and it is easy to get swept away in this type of sentiment change. It's full risk on right now. So you're seeing, things like Bitcoin rally. You're seeing things like high yield spreads hit the lowest level since 2007, 256 basis points. And really, when everything goes risk on, it's not usually focusing on the fundamentals as much. The fundamentals are okay. Don't get me wrong. I mean, earnings are up about 5-6% here in Q3, and the economy is holding in pretty well. But this repricing to us is getting rich, and the PE ratio on the S&P 500 pushing up on 22 times, 27 times on a trailing basis is really looking at kind of tech bubble type valuations. And it's going to be hard for fundamentals to come in and deliver, given how much good news is really priced into these markets.
Well, let's put some color around those fundamentals, Matt. Talk to us about your growth expectations, not just for the U.S., but for the Eurozone and Asia on the heels of a red sweep here.
So we do see the U.S. as the strongest economy in the world, and that actually really isn't a new development. That is one that has been the case. We think the momentum of the economy continues here, but we are seeing things like housing, which may be getting a bit of a tapering of growth because of higher mortgage rates as of late. And that's, a leading indicator on the economy. When we go around the world, where we're looking at Europe, to us is still a modest growth backdrop. They are going to be cutting rates, which should unlock some more growth, but frankly, it is a weaker growth backdrop. And then even in China right now, you are seeing some decent data. I mean, you got a services PMI last week that wasn't bad. Exports decent, but PPI, negative almost 3%. That is usually an indicator that kind of speaks to the broader China's growth backdrop. And the fact that they're basically in disinflation or even close to deflation isn't a good sign. So we see the U.S. continuing to be the best place in the world, but frankly, we even see modest growth from here. We go back to the 2016 election through kind of 2019 window, and we did see a bit stronger growth, but frankly, it wasn't blowout growth. It was just steady. And that's kind of what we're expecting for now. but we do see risks as asset prices have really inflated just in this last week.
Well, Matt, now you're talking my language, right? China. I mean, I am the chief emerging market fixed income strategist here for Bloomberg Intelligence. And when I think of U.S. exceptionalism, at least over the last few years, I've thought of it lifting my markets or lifting the rest of the world, shall we say, in terms of growth. But now, I mean, with a red sweep here, I mean, I'm concerned that maybe U.S. exceptionalism will come at the expense of emerging markets. What are your thoughts on that?
It's possible. And you look at the dollar, I mean, you were just talking about it, and the dollar is a big key input into that. And, if the dollar continues to strengthen, I heard one quote, it's our currencies, but our currency, but it's other countries' issue in essence. So if you're a U.S. investor and you're going around the world and you're looking at either bonds or equities, you got to think about the currency translation. And if the dollar is going to be stronger, it weakens those foreign currencies. That translation can be a headwind. You can try to hedge it, but then frankly, you're taking some of the return potential off the table. We do prefer the U.S. here in terms of the bond market. We're getting paid attractive yields. I know you've got like things like Brazil, which has a higher rate, but much of the rest of the emerging market, I mean, China's 10-year yield is nearly half that of the U.S. 10-year yield, and that's never happened before. And so you're actually getting paid here, and you've got better growth prospects. But I do want to caution one thing. You go back to the 2016-17 window. So the election in November 16, 2017 was better year for international markets than U.S. Chinese equities was actually one of the best performers. So, you look back and you say, wow, because of this growth impulse, this risk on impulse, it actually helped flood liquidity to foreign markets. But this time off the bat, the stronger dollar and a little bit of a higher rate rise is not necessarily causing that same parallel to unfold as of yet, at least.
Hey, Matt, in the U.S. fixed income market here, do I sit comfortably with my 2-year treasury at 4.25%, clip that coupon, or do I take some credit risk here?
Not as much of a fan of the credit risk, but we're intermediate on duration risk. And even that I know has been, we've seen the headwind, obviously, of last month or so, big backup in yields. We look back on the 2016 scenario, right after the November 2016 election, the 10-year yield rose 80 basis points. We've already done that. We've already rose 80 basis points. The 10-year was 360, now hitting 440. It's back down to 430. But in that prior scenario, after that first shock, in essence, to the bond market of Trump getting elected in 16, it digested and actually took a year off where rates did not rise. They actually came down a bit. So there was a kind of digestion period, relief rally in bonds. I wouldn't be surprised if that's actually what we see. We actually see disinflation here. And, I know the bond market has repriced better growth and a bit of inflation pressures, but we see oil prices falling. That's good for bonds. Eventually we think the bond market's going to look at that and say, wow, that's disinflationary. Wage growth has been slowing. We don't see necessarily corporate tax cuts or other tax cuts lifting wage growth. It didn't happen actually that much in 17, 18, 19. And then housing's been 2/3 of the inflation backdrop as of late. And frankly, if mortgage rates come back up a bit and we're seeing some of these hot spots in housing like Texas, Florida, Colorado, they're starting to see an increase in supply rising with higher mortgage rates. That could mean lower prices. So that's disinflationary. If it's a disinflationary backdrop that we start to see unfold next year, we actually think bonds will rally, but you're not getting paid much in credit. So we only have a very mild credit bias, but intermediate on the duration front.
Matt, real quick, 30 seconds here. U.S. yield curve, U.S. Treasury yield curve, bear flattening move. I mean, 2s10s is almost back below into negative territory. 2s5s are already there at 6.5 negative. Talk to us about the shape of the U.S. yield curve. What can you take away from that?
There's usually only one way out for this long of a inversion, and it's really a bull steepener. We're hearing job voting already, the Fed. That's one of the biggest developments last week, frankly. We wouldn't be surprised if the Fed does cut further into next year. We're seeing a bit of a growth impulse. If that fades, we think the Fed's going to be cutting more than the market thinks, and that's going to steepen the curve, and that's going to really go back to normalized yield curve environment.
Matt, thanks so much for joining us. Really appreciate it. As always, Matt Miskin, he's the co-chief investment strategist at John Hancock Investment Management. They're up there in Boston out there in the Back Bay.
Yeah, they don't have the same worries that we have about New York sports down here. So
no, it's just
good for them.
It was a disaster of a weekend on all fronts here for New York sports, starting with the NFL franchises. Looking at the futures here, got about an hour and 5 minutes to the cash open. The S&P 500 up 22 points. That's 0.3%. The Nasdaq up 75 points. That's also about 0.3%. The 10-year Treasury, the market's closed. Kids not coming to work today. I don't know, but we're at 4.3%. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures advancing. Traders focus on U.S. inflation data this week and its potential impact on the pace of Federal Reserve easing. You had Minneapolis Fed President Neil Kashkari, who said that policymakers want to be confident inflation is heading all the way back to the 2% target. He also said a strong economy could lead the Fed to cut rates less than previously expected. On Wednesday, we get the Consumer Price Index. Over to futures right now. NASDAQ futures up 0.3%, 78 points. Dow futures up 0.4 0.4%, 187 points. S&P futures up 22 points. Bond market closed for the Veterans Day holiday. We'll move over to currencies right now. The dollar stronger. Japanese yen, euro, British pound weaker. We have Bitcoin rallied past 82,000 for the first time. Right now it's at 81,903. Shares of Nvidia, they're up about 0.5%. But the money manager, who's been called by the UK press as Britain's Warren Buffett, well, he's skeptical about its run. Terry Smith says the hype is overblown. And TSMC was told by the U.S. to halt shipments of some advanced chips to China starting today. Now, that's according to Reuters. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Economic indicators today are brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. Damian, I may have a problem with our next guest here. Not only did our next guest get her undergraduate degree at the University of North Carolina
I saw that.
at Chapel Hill, but she doubled down and got an MBA from UNC. I'm not even sure they're going to be able to field a basketball team there this year. We'll have to see how that goes. Paige Henderson, Senior Portfolio Manager, Allspring Global Investments, joins us here. Paige, how did you and your colleagues kind of group or kind of sit down the day after the election, kind of maybe rethink your outlook for these markets and your portfolios? What was the conversation like?
Well, I think what our view in general from Allspring is that there's going to be a lot of shifting, and we're all kind of just sitting tight and reevaluating. I do think that some of the moves that happened immediately after the election, because it was a surprise to many people, that some things overshot. We were definitely looking through our portfolios and thinking through the potential impacts of tariffs, but there are other factors going on that may mute that outcome. And of course, it's not going to happen tomorrow. It may not even happen, by the end of January. But I think the bigger picture issue in international is what's going on with rates, and the rates are kind of decoupling across countries. 20 years ago, when the U.S. moved, everybody else followed. You're not seeing that now. And the U.S. isn't the only country that's having these major shifts in political perspective. As various elections, there's been a turnover in leadership around the world. So those are things that we're looking at.
Paige, sorry about Paul there. I mean, he's looking to pick a fight on a Monday morning, so let me apologize on his behalf. But let's just talk a little bit about the fact that you are also head of the Resilient Global Equity Team at Allspring Global Investments. Resiliency, what does that mean in this environment? I think defensive, I think dividends, but maybe I'm wrong.
No, that's all true. We are looking to outperform over a full market cycle. We own strong companies. We're focused on providing a good long-term return, particularly for people or endowments or companies that rely on their income. And so we generally outperform when the market's selling off. For example, like 2022, any kind of market where valuations come in. We liked buying companies that you might describe in Warren Buffett speak as a franchise company. So we focus on companies that are global multinationals in many cases. And I think that's going to be an important factor as we look at the dollar volatility, because yes, when the dollar goes up, the price of your shares translates as worth less as a U.S. investor. But then those companies that have a lot of business in the U.S., their earnings go up. And that's actually a bigger factor over the long term because that's more of an average.
So it's interesting you talk about currency volatility here. For me as an emerging market practitioner, that is something that we pay very close attention to. Volatility into this election, it was at levels that we haven't, way higher than 2016 and 2020. But I think investors were disappointed, right? Vol did not, rise to the extent that the markets were pricing in. What are your thoughts there? And what are your thoughts with a VIX here at 15?
I think everybody's just trying to figure things out. But I also think we're in an unusual situation that maybe we haven't seen in 100 years when we weren't talking every morning about what was going on in the markets. But Trump wasn't a complete unknown. We have experience with him, so it's going back to what you know. And I think there's been a lot of pieces about this is what happened and in the first administration versus the second. We're still working our way out of the pandemic and the shocks from that. We've got a different playbook. And I think the thing that's going to be really interesting is how the bond market evolves, because now the Fed isn't really kind of the last price setter. And, at the beginning of my career, many, many years ago, there was, we talked about the bond vigilantes, and you saw that as the long rates came back up right after the Fed cut. So I think that's going to add some discipline to the market. And this is important as an international investor because all of the fixed income and interest rates flows into currency.
So, Paige, you mentioned being an international investor. Talk to us about Coca-Cola Euro-Pacific Partners. What is that?
That is a company that's a Coke bottler. People are familiar, of course, with Coca-Cola, which is traded in the U.S. But CCEP is the bottler. They do most of Europe. They recently acquired Coke Amatil, which is Australia. They're a really great operator. They're an interesting company because they don't have any revenue exposure to the U.S., but then they have the benefit of partnering with Coca-Cola and having the strength of that brand. That company was pretty banged up during the COVID because in Europe, people are more likely to buy soft drinks and in restaurants and out away from home. And so they really struggled in the pandemic, but they came right back through, and they've proven to be very shareholder focused. They return a really good dividend. And Coca-Cola wouldn't be giving them new territories like they just did in Asia if they weren't a great operator. So they're one of the names that we can own that are global, but that don't have U.S. exposure. But they have all the other things we're looking for, strong free cash flow and a strong balance sheet.
Paige, when you look for resiliency, you look for quality in the U.S. equity market, what does your portfolio look like today? I mean, how much tech is in there? How much retail is in there? Consumer discretionary, consumer staples? I mean, when you think of dividends, you think of utilities. How much? Talk to us about, sector representation in your portfolio today.
So we have multiple strategies. We have a global strategy, which would be U.S. and international. And I guess that's kind of where you're asking. And that strategy is dividend focused. And we manage that to a dividend focused benchmark, which by definition is going to have less tech. So within the dividend space, we tend to overweight tech. And that's fortunate that we're doing it in the global strategy because the U.S. has more strong growers with higher dividends. In our international only, we're trying that organically. The international yield is about 3% in IFA, so that gets us where we need to be. We're going to lean into the tech names, but not quite have as much overweight. And then we really like a lot of the industrials. We've historically owned some, staples and consumer staples and consumer discretion because some of those are, like Louis Vuitton and L'Oreal and those luxury names. And those have been a little bit under pressure. And I believe that from a long-term perspective, it's going to be a great time to start building positions in those. But we got to work through what's going to happen with the tariffs. They could kind of be under pressure for, a few more quarters.
Paige, how do you guys think about dividends? Is it dividend growth? Is it dividend yield? How do you guys think about dividends when you invest?
We try to balance that. When you want to have a portfolio that's going to support you when the market sells off, that's where those higher dividend companies, maybe the utilities, of course, utilities are up a lot this year, but utilities, telco, those companies kind of give you ballast, like jumping into the pool with water wings. But then you also want the companies that are growing their dividend. Ultimately, we want to provide a income stream for our clients that will grow with inflation. You can't grow your dividend if you're not growing your income. So that's where we have a balance. And I would say we kind of about 40% exposure to the higher payers that are not growing as fast, and 60% to the companies that have that strong growth but don't have quite as high of a dividend yield.
Paige, thanks so much for joining us. Really appreciate getting a few minutes of your time. Paige Henderson, Senior Portfolio Manager at Allspring Global Investments and a proud alum of the University of North Carolina at Chapel Hill with a questionable basketball team. We'll just leave it at that. With our news in New York City, here is John Tucker.
All right, Paul. President-elect Donald Trump making key position announcements as he starts to form his second administration. In a social media post, the president-elect said he's going to install Tom Homan as border czar with oversight over immigration, maritime, and aviation security. Let's get more from Bloomberg's senior writer, Bill Ferries.
Tom Homan used to run the Immigration and Customs Enforcement Agency. He was really the guy partly responsible for this family separation policy that defined Trump's policy at the U.S.-Mexico border. He will be some kind of a border czar, which means he won't have to face Senate confirmation and can try to run things right out of the White House next to the president.
Well, Bill Ferry says Trump is expected to use czar-like positions to concentrate power among loyalists in the White House, giving appointees broad discretion over government departments and agencies to implement his agenda. Republicans edging closer to winning control of the House and pulling off a clean sweep with 218 seats needed to keep their majority. The AP has called 213 races for the GOP and 203 for the Democrats. The latest is Arizona's 1st District. Republican incumbent David Schweikert holds on against Democrat Amish Shah with 52% of the vote to 48%. 19 races are still in play, many of them in California, which does take longer than most states to count its absentee ballots. And President Biden will host President-elect Trump at the White House this week for their first post-election meeting. They'll meet at the Oval Office 11 a.m. Eastern on Wednesday. That's going to be setting in motion the transition of power that will be completed in January. And there's now a federal investigation at FEMA after the agency fired a supervisor for what's being called a clear violation of FEMA's core values and principles to help people regardless of their political affiliation. The FEMA administrator says an unnamed supervisor ran a survivor assistance team and told her workers not to go to homes with yard signs supporting President-elect Donald Trump. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Damian, Paul, Lisa.
All right, John Tucker, thank you so much. We appreciate that. Damian, right up your wheelhouse. Bitcoin, up 2.25%. Just under $82,000 per token. We got to an intraday high today of $82,496.
Yeah.
Things are, talk about a risk asset just ripping.
Yeah, I look at the other side of that. I'm looking at the price of gold here. It's going the other direction, right? And gold was really the Trump bull trade heading into that election. So the fact that it's come off nearly 3%, since last Tuesday is meaningful to me. But you're right. Bitcoin is definitely, the risk on buzz is definitely gripped it.
Now, the good news from Matt Miller, he has a Bitcoin token. The problem is he doesn't have the code to unlock it. He wrote that on a piece of paper and misplaced it somewhere. Now this is 10 years ago, 12 years ago, when Bitcoin was 3 or something. He was one of the first people I ever heard talking about Bitcoin.
I was just reading an article about someone who had offered to pay for an apartment in the city in Bitcoin, and if they had accepted that offer back in the day at whatever Bitcoin was priced at, it's in the tens, if not hundreds of millions of dollars.
Yeah, just
incredible,
crazy. So with the Trump presidency incumbent, risk currencies, cryptocurrencies in particular, are kind of moving decidedly higher here. S&P 500, that's up 16 points today. The Dow's up 162 points. That's about 0.3% there. 10-year Treasury, they're not trading, so I'm not even going to quote them today. If they're not coming to work, I'm not quoting them. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, the surge in stock showing no signs of easing. Futures advancing this morning, but JP Morgan says it may be a struggle to sustain their rally beyond year-end if benchmark U.S. yields approach 5%. Let's get to NASDAQ futures up 0.3%, 72 points. We have Dow futures up 0.4%, 172 points. S&P futures up 0.3%, or 18 points. We have the bond market closed for the holiday. We'll move over to commodities, where we have Brent crude down about 2%, $72 a barrel. WTI crude $68 a barrel. We have spot gold lower, $2,638 an ounce. Shares of Palantir up more than 3%, and that's after a big AI move, launching a partnership with Amazon Web Services alongside Anthropic for U.S. defense. An AI server maker, Super Microcomputer, their shares down 6%. That's after Ernst & Young, well, they bailed as their auditor late last month. And while a lot of companies are rethinking their China strategies, Lululemon, their $150 yoga pants, they have become a surprise hit there. Can you believe it? This year, it has more than 130 outlets hit $1 billion in Chinese sales for the first time. I guess they like their Lulus.
Sure,
they want to pay $150.
You don't do that, do you?
No, I do not. That's your Bloomberg Business Flash.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here on our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. Bloomberg Surveillance today is brought to you by Build America Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. That's for Matt Miller for you. BAM, we like our good friends at BAM. Nick Stadtmiller joins us. He's our in studio. He's head of product at Medley Global Advisors. He does this thing, Damian, called emerging markets.
Never heard of him.
Exactly. Nick, what emerging markets do you focus on, and which is the most, I think, attractive to you at this moment?
Well, historically, I've done the CEMEA region, so Turkey, the Gulf, Russia, Ukraine. I've spent quite a few years living in most of those places. But sort of over the last couple of years, I've been looking a lot more globally. And in terms of what looks interesting to me right now, quite frankly, I'm a bit worried about a lot of emerging markets right now. But I think if I were, if someone held a gun to my head.
Why is that?
Well, I think that the biggest risk that I see is an inflationary U.S. and a deflationary China. And if both of those happen at the same time, it's going to be really bad for emerging markets for quite some time. But if somebody held a gun to my head and said, what do you like right now? I think I would probably be focusing more on frontier markets and further down the credit stream. So lower rated distressed sovereigns in places like sub-Saharan Africa and parts of Asia.
All right, that's not like Mexico or Brazil that this dude talks about.
Yeah, but he's talking about the dollar bonds, Paul. I mean, look, let's get into the nitty gritty here. I mean, let's first begin with Central and Eastern Europe, right? Let's talk about Hungary. Let's talk about Viktor Orban. He was first one to graduate Trump after he won. Let's talk about this rumor that Trump and Putin spoke just a few days back, and now I think the Kremlin's rejecting that. I mean, what's up? What's down? What's going on in your region?
Well, I think the situation with Orban and Hungary is a bit mixed because, of course, Orban's thrilled to see Trump win. They share a lot of political ideas. And
they share a locker of Tamarack. No, I'm sorry.
And I'm sure that Trump would be very supportive specifically of Orban when he can. But the fact is that Trump is much a Eurosceptic, a skeptic of the transatlantic alliance. And there are a lot of worries about the euro and the U.S. relationship with the European Union. And the Hungarian forint, Czech and Poland, those are all sort of high beta versions of the euro and very closely tied to the fates of the euro. So the irony is, even though Orban really, supports Trump, it's probably not going to be very good for financial markets in Central Europe, and you're starting to see that filter into to currency prices there.
And what about the impact of the German coalition, falling out of bed here? I mean, there's got to be an impact on some of these periphery markets like Poland, like Romania, Hungary, the Czech Republic. I mean, any sort of spillover from that?
Well, I think right now it seems sort of minimal. One of the weird things that's happened is German bunds are starting to trade through euro interest rate swaps, which suggests I would say bad financial market conditions for the European bond market, and that sort of thing always filters in the higher risk the emerging sort of periphery of the EU is always going to suffer. But in the short term, I think, a little bit of domestic political instability in Berlin is probably not going to throw the European Union off its rails.
Now, for our audience who's not following that, what we're seeing are swap spreads in the Eurozone, specifically SCHAT spreads, 2-year swap spreads in Germany. Narrowing.
What are we seeing?
We're seeing a little bit of disruption in the plumbing of the European fixed income market, right, in the funding markets. And what we look at are European swap spreads, specifically German SCHATs, 2-year swap spreads, which is
German
it's the
I'm not
spread
sure I'm allowed to say that on
between
radio.
it's the spread between European swaps and basically the underlying bonds. And what you've seen are them narrow as the bond market is effectively sold off, right? So
Lisa, I've been on Wall Street for 35 years. I've never heard that once before.
I mean, you have to be looking at this, Paul. I mean, this is like looking at the plumbing of the U.S. market, right? But
Okay.
I mean, really where we are, Nick, I mean, is you're talking about, financial conditions tightening in Europe, right? And so what does that mean? I mean, does that mean that, we're going to see more stimulus out of the Eurozone, or is that something we could be waiting for as well here in the U.S.?
Well, I think at the margin, it increases the chances that the European Central Bank is going to have to cut a bit more aggressively. But the history of European policymakers is that they do the bare minimum after they're absolutely forced into it. So I wouldn't get too preemptive and call a very bold move from European central bankers quite yet.
So let's shift a little bit and look a little further south into the Middle East and look into Israel. I know that's right in your wheelhouse as well. Let's look at what's going on in the Gulf region. I mean, any thoughts there? I mean, what does a Trump administration mean for the Middle East, for Saudi Arabia, for some of these other markets?
Well, Trump and his family have cultivated very strong ties with the Saudi leadership and other senior Gulf officials around the region. So I'm sure in a lot of Gulf capitals, there's a lot of celebration going on about the prospects of a second Trump presidency. But ultimately, I think the complication that you have with Israel and the fact that since the conflict began with Hamas and the more recent conflict with Iran, the Saudis have sort of got cold feet about the idea of normalizing relations with Israel. So it's going to be very difficult for Trump to keep all of his friends and partners in the Middle East happy, continuing to support Israel, which he's unequivocally said that he will do, while at the same time trying to broker some sort of deal between Israel and Saudi. It's kind of a tough climb, so I would say expectations are pretty high. But more broadly, I think that the Gulf will definitely bask in a moment of good relations with the U.S. here.
What's your call on China here?
My call on China is kind of like what I said about the European authorities earlier, is that the Chinese, and I don't think it's that the Chinese officials are slow to react, it's just they have a very different reaction function. And so they will continue supporting the market. The Politburo was quite clear that they're going to draw a line under house prices. But this is a balance sheet problem. And the balance sheet problem is you have a slumping stock market and, more importantly, a slumping property market, which is really eating into consumer confidence. And the Chinese consumer, even before all of this happened, was not an aggressive, leveraged play. Chinese consumers have always been big savers and very conservative. The government needs to get asset prices moving in the right direction to get confidence going, to get consumer spending up in China. And that's going to take time. And I think the way investors think about this is, okay, announce a big bazooka today, and then in a month or two, Chinese consumers are going to spend again, and everything's going to be fine. This is a multi-quarter, if not multi-year, balance sheet problem that authorities are trying to solve. They will do it, but they will do it on their own time frame, and I think investors are going to be disappointed by how long that takes.
Nick, last question, 30 seconds here. At the outset of our conversation, you mentioned, sub-Saharan Africa, right? Some of these frontier sovereigns, which are all dollar bonds, but I mean, the spreads on those dollar bonds have come in quite considerably, right? I mean, if you look at the EM distress, the BOFA EM distressed index, it's up 60% year to date, largely because of spread compression in the sovereign space, high yield sovereign space. Just how much juice is left in those bonds, really?
Well, probably not another 60%, but I think the story for why the outlook is I think pretty good going forward is, one, you're seeing ongoing reforms and improvements, places like Egypt, which is up there, not sub-Saharan, but in northern Egypt. You're continuing to see good reforms. And I think they're also a little bit less exposed to higher dollar yields because rates are already so high. They move up another 50, 100, 200 basis points. It's not going to kill them.
All right, Nick, thank you so much for joining us. Nick Stadtmiller, Head of Product, Medley Global Advisors. They're out there in Milwaukee, but he's here in New York City. Man, there's no way you're getting this dude from like Saudi Arabia, wherever he was, to go to Milwaukee. It's a great town, though, by the way. Nick Stadtmiller, thanks so much for joining us. This is Bloomberg.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets, get her thoughts on these markets. And then in studio later on this hour, Cam Dawson, CIO at New Edge, will discuss the equity rally. Is there more legs to go? And then depending upon the reliability of Amtrak and the Acela train, we may or may not have Eric Balchunas, senior ETF analyst with Bloomberg Intelligence, in our studio talking about all things ETFs. The money continues to flow into ETFs. Bloomberg Surveillance this morning, it's brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global benchmark products across all major asset classes. CME Group, where risk meets opportunity. Lisa Mateo has got a Bloomberg Business Flash kicking off this hour. Lisa, what do you have?
You got it. Well, Wall Street, they're coming off the best week of the year. The S&P 500 hitting its 50th record this year. In fact, all three indexes closed at record highs on Friday. Right now, we have NASDAQ futures up 0.3%, 67 points. Dow futures up 0.3%, 152 points. And S&P futures up 0.2%, or 16 points. U.S. bond market closed for Veterans Day holiday. We'll move over to Bitcoin. That's what I want to point out. It rallied past 82,000 for the first time. That was boosted by President-elect Trump's embrace on digital assets. Crypto really been in a hot streak since Trump's victory. Some crypto-sensitive stocks checking with Coinbase up 14%. We have MicroStrategy up 10%. Tesla among one of the most actively traded stocks this morning. Their shares up 6%. The company reaping the benefit of the so-called Trump trade. A rally in shares this Friday. It sent the company back over the $1 trillion mark for the first time since 2022. Bank stocks extending their gains. Investors hoping for a revival in deal making. JP Morgan Chase, Goldman Sachs up 1%. Morgan Stanley up about 1.5%. And finally, shares of Cigna up 6% after it said it will not pursue a combination with rival insurer Humana. Humana is down 5%. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower doing his best to sit in for Tom Keene in the big chair. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. That's video, Damian.
Video.
Go to youtube.com, search Bloomberg Podcast, and that's where you find us. Markets just ripping here. They love this Trump trade here thing. They love the risk-on appetite here. We, again, got Bitcoin over 80,000 per token. That gives you a sense of the risk-on environment. What does it mean for stocks going forward here? Lori Calvasina joins us, head of U.S. Equity Strategy at RBC Capital Markets. For folks that have been around the street once in a while, Royal Bank of Canada, RBC. Lori Calvasina. Lori, thanks so much for joining us here. As you guys kind of woke up on your team last Wednesday morning with the election, how did you guys change kind of your outlook, if at all, as it relates to U.S. equity strategy?
Well, thanks for having me as always. And look, I don't think we really changed anything. We came into the election last week saying we really didn't know what the outcome was going to be. I think we're in the discovery process at this point in time in terms of figuring out exactly what Trump wants to prioritize. This is my 7th presidential election in an equity strategy team on Wall Street. I'm letting you do the math and figure out, how old I am. But, I think one of the things we've learned is that you get this whole menu of things, right, that candidates put out, and they're not possibly going to be able to do all of them. We do take Trump pretty seriously that he wants to do what he said. But there are some congressional realities he has to bump into as well. And I think that's why you sort of saw this initial big surge. And then things did settle down just a little bit. So I would say nothing's really changed in terms of our outlook. We're still using all our same tools. I do think we have a little bit of policy uncertainty to work through. But generally, I think the market is giving the benefit of the doubt right now to the politicians down in D.C. that the positives are going to outweigh the negatives.
Lori, we all know about that strong correlation between U.S. GDP, the forecast revision index for U.S. GDP, and the S&P 500. Talk to us a little bit about your growth expectations in the U.S. now that the Republican Party has swept pretty much not just the White House but Congress as well.
So when we think about the economic growth expectations, one of the things that really was interesting to me during the campaign season is that we were not hearing a lot about the industrial economy in terms of specific things the two candidates wanted to do. Of course, we heard about tariffs, and the hope is that brings back domestic manufacturing. But we heard a lot about things, like taxes, no more taxes on tips. And so, I do think that the whole idea of the consumer, especially the low-end consumer, may be in need of some help. Let's see if anything comes out of Washington on that front. I think certainly the tax cuts, sort of speak to the hope that it will sort of preserve the spending power of all kinds of consumers. But I think we have just a general problem in the post-COVID environment, which is that economists keep underestimating GDP in the U.S. And we're just constantly playing catch-up, except for 2022. The numbers are starting out too low, and everyone's chasing their tails, and then the market's racing up because there's just this resiliency in the overall stats that's been underappreciated. So as we look to next year, the numbers have been a little bit below 2%. 0 to 2% is typically a very weak environment for the stock market, but 2 to 4 is typically very strong. And if the market can get excited enough and the economists can get excited enough to add just a little bit to their GDP forecast for next year, that should give us a pretty strong backdrop economically.
Small caps. What do you think, Lori, right here?
This one's tough. I mean, there was so much good news baked into the small caps coming into the election. If I look at the positioning data on CFTC, it's interesting. If you go back to the first Trump presidency, it wasn't like small caps just outperformed and went up and to the right. What we saw were 3 distinct outperformance trades relative to large. One in 2016 on general Trump optimism, a second in 2017 on the passage of corporate tax reform. And then we got a third one in 2018 as the early stages of the China trade war, people wanted to buy the USA and thought the US would be okay. The rest of the world would have a recession. And so buying the small caps was the most easy way, the purest way to buy domestic exposure for the U.S. And what we saw in the positioning data, as well as valuation data, if you just looked at a weighted median PE in the Russell, is you just kept hitting up against the ceiling. And guess what? On the positioning data, coming into the election, we were already back at those 2016 highs. Maybe a little bit more room to get there, but not quite. Valuations have given us a little bit more room. So we ended last Thursday. I don't have the Friday data point yet, but on Thursday, we hit a 17.6 market cap weighted median PE on the Russell. And if you go back to that 2016 period, I think we got up to around 19. But if you went to the 2018 high, we only got up to like 17.9. So we're within that range, but maybe not at the top of that range. So I think there's at least a little bit more room to go. If it peters out here, that doesn't mean you have to write the small caps off. It just may mean that we're in another one of these, kind of very trading oriented environments like we were back then.
Lori, everyone this weekend, including myself, had to go back and sharpen their pencils and update their regime models. I'm curious, I was reading over the weekend one Edgar Denny now targeting 8,000 on the S&P 500 in 2026. I mean, talk about Trump 2.0. I mean, he's comparing this environment to the Roaring 20s regimes, Roaring 20s. What do you think there?
So look, I'm not quite there. I do sort of sit here and say, like, my positioning data is stretched, my valuation data is a little bit stretched, but I can't really pick out anything in the narrative that makes stocks go down right now. So, that's sort of what we're wrestling with. I will tell you that when I do my modeling, and I always try to stick by the numbers, even when we've got all these exciting stories, we model out the PE for next year, which comes to around 23 times. And we use a few different scenarios, but we have a model that goes back to the 1960s based on inputs of Fed funds, 10-year yields, and also PCE. So we do have to take the idea seriously that some of these proposals could cause inflation to nudge up. We do have to take seriously the idea of what's going on with 10-year yields and why they've been so strong. And I'll tell you that 23 times PE I can get for next year, whether you're using my earnings or consensus earnings, it kind of points to around a 6,200, 6,500 level on the S&P for the end of the year. Now, this is just a model. It's just a guesstimate. If you want to, kind of get higher than that, you can definitely do it on the earnings side. But some of the things, the worries that are emerging on inflation, some of the things we're seeing in 10-year yields, and the idea of a Federal Reserve that may not cut quite as much as people want, that's going to put some pressure on PE multiples. So we're going to have to see how the math shakes out. I still feel pretty constructive on next year, but I would not, sort of put it into the Roaring 20s right now.
So then, Lori, last question from me. Are we early cycle, late cycle, or somewhere in between?
I think this is a completely different beast. I think as we sort of looked at what happened with the election and really, inflation, right? It seems like that's kind of the one thing a lot of the pundits are pointing to down in DC as making, people really feel like they needed a change. If you go back and look at the misery index in 2022, when the stock market, by the way, priced in a recession, both small cap and large cap, consumer sentiment went down to recession type lows on the Michigan survey. Well, guess what? The misery index spiked to recession type highs because of the spike in inflation and despite the low unemployment rate. So people basically felt like we had a recession, even though you didn't technically have one. I kind of use that as my starting point, and so it feels mid-cycle to me.
Lori, always a good time to chat with you. We really appreciate you taking a few minutes of your time. Lori Calvasina, head of U.S. equity strategy at RBC Capital Markets, a former resident on the lawn in Charlottesville. And for those of you that know what it means to live on the lawn at University of Virginia, With our news in New York City, here's John Tucker.
All right, Paul and Damian, President-elect Trump moving quickly to fill in key positions for his second term. He's already tapped somebody from his first administration to lead his efforts at the border. Let's get more of that right now from Bloomberg's Gina Cervetti.
The president-elect says he'll name Tom Homan to be his border czar. Homan is a former acting head of U.S. Immigration and Customs Enforcement. In Trump's first term, he became the public face of the president's zero-tolerance approach to immigration, which included separating thousands of undocumented children from family members. But Homan recently told CBS News Trump's plans for a mass deportation in his second term won't mean a mass sweep of neighborhoods. Homan also took part in the Heritage Foundation's Project 2025. Trump tried to distance himself from that project during his campaign. Gina Cervetti, Bloomberg Radio.
And Donald Trump also turned to a key member of leadership in Congress to be his next UN ambassador. The president-elect telling the New York Post he's naming New York Congresswoman Elise Stefanik to the position. Let's get more from Bloomberg senior editor Bill Ferries.
Someone who was really kind of more of a moderate Republican in her early years in Congress, but who made a sharp turn, became a big defender of President Trump in the second half of his term. A true loyalist, someone who will likely sit in the cabinet as a UN envoy. And someone who, the president-elect feels like he can trust wholeheartedly.
Bill Ferries saying Stefanik is currently the fourth-ranking Republican in the House. And Mr. Trump also appears to be moving quickly on foreign policy. This is according to the Washington Post. The president-elect spoke with Russian President Putin. Trump reportedly urging the Russian leader not to escalate the war with Ukraine. The Kremlin, though, is denying this story. Republicans getting closer to holding on to the majority in the House. Right now they have 213 seats, the Democrats 203. It does take 218 to control. And 19 races are still left to call, many of those in California, which takes longer than most states to count its mail-in ballots. And a wicked mistake on the packaging of Mattel's Wicked movie dolls. Mattel mistakenly printing the link to a pornographic website on the back of its packaging for the dolls, created in partnership with Universal's Wicked, the special edition dolls being sold at retailers like Target. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Lisa, Damian, Paul.
Have I been hearing stuff over the last few days about congestion pricing back in New York City?
There was a New York Times story from Friday saying that Governor Hochul may consider reinstituting it, but at a lower price, somewhere like about $9 from $15, and trying to do that to raise money for the MTA before President-elect Trump takes office, because apparently he could kill it.
Was that the sound of John Tucker running off the road trying to get above 60th Street in Midtown Manhattan?
Exactly.
I take no position since I resigned my position as congestion correspondent.
Exactly. John Tucker, thank you so much. We appreciate that. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Futures Report is brought to you by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group Futures across equity indices, interest rates, FX, energy, and more. Access CME Futures around the clock at Interactive Brokers. All right, we've got futures advancing. Donald Trump's victory in the U.S. presidential race continues to boost equities. Checking with shares of Trump Media Technology. Right now, they're up about 5%. We'll go over to NASDAQ Futures, up 0.2%, 54 points. Dow Futures, 0.3%, 164 points, and S&P futures up 0.2%, or 15 points. The bond market closed for the holidays. We'll move on to commodities, where we have oil extending its biggest drop in almost 2 weeks. That's due to a soft outlook in top importer China. Right now, we have Brent crude down about 2% at $72 a barrel. WTI crude $68 a barrel. We have spot gold down nearly 2% at $2,632 an ounce. To currencies, we have the dollar stronger. We have the Japanese yen weaker. Same for euro, British pound weaker. Bitcoin, yes, up more than 2% at 81,758, passing 82,000 for the first time. A few companies making news this morning. Reuters reporting Amazon developing these smart eyeglasses for its delivery drivers. It's going to help them guide them to, around, within buildings. They'll be wearing them, but sources are saying it'll shave off seconds of their delivery times. And shares of Burberry, they're on the rise, up about 4% in London after another report. It said that Montclair, that's the maker of those puffy coats, well, is set to take it over. Now, as far as earnings this week, we'll feature reports from Home Depot, Disney, Live Nation, and Spotify. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so check us out. YouTube.com, search Bloomberg Podcast. Damian, at 9:20 a.m. Wall Street time, along with the NASDAQ and the New York Stock Exchange, we're going to observe a moment of silence for Veterans Day.
Yeah, I know. I'm going to have to really zip my mouth to accommodate that. But
exactly. I was looking at WTI crude oil. Lisa was just calling it out.
Yeah.
down 2.7%. Now it's $68.50. I guess that's a real call on the demand side of the economy.
Well, the debasement trade's in full effect. I mean, if you look at the broader commodity index, we're now down on the year about 1.2%, the Bloomberg commodity index I'm referring to. But I mean, a lot of that has to do with gold recovering. I mean, falling out of bed a little bit, a bit of a profit taking there. But if you just look at, we've seen a lot of de-risking across the whole of, global financial markets into this election. I just wonder how much cash there is on the sidelines, Paul. How much, how willing are people to reach into their pockets, take their hard-earned dollars and put it to work in places like emerging markets? The verdict is still out.
Yeah, exactly. And we've got the equity futures, as Lisa was just reporting, higher across the board here. The bond market folks aren't working today, but the 10-year Treasury sitting at 4.3%. And again, just looking at Bitcoin, up 2.4%, 81,800 on Bitcoin. So it kind of goes to the whole concept of the risk trade on here. Bitcoin, that is certainly the play.
Well, look, one market that is up here is the currency market, and it is red across the board. I can't find one currency in G10 or, for that matter, emerging markets that's up versus the dollar here.
Yep, very good. So again, futures a little bit higher here in the market. S&P up 0.3%. The Nasdaq up about 0.3% as well. The stocks index for Europe up 1.3% today. So they've had a good day. Right now, we're going to join our friends at Nasdaq and the New York Stock Exchange, observing a moment of silence on behalf of our veterans on Veterans Day. All right, that's observing a moment of silence today on November 11th, Veterans Day, to remember our veterans throughout our history. So that was journeying with our friends at the New York Stock Exchange and NASDAQ. Right now, let's get a sense of kind of where this economy may be going. Kathy Bostjancic, chief economist at Nationwide, joins us. Kathy, boy, the economic data that's been coming in has been quite strong, and this will be another big week of economic data. We'll get inflation data this week with CPI on Wednesday, PPI on Thursday, and then retail sales on Friday here. I'd love to just get your thoughts, Kathy. Where is this U.S. economy right now?
Well, good morning, Paul. The economy is quite resilient and firm right now. As you said, we had 2.8% growth in the third quarter. And more importantly, the September data that we received indicate strong momentum heading into the fourth quarter. So we'll get the October data this week, as you mentioned, particularly retail sales. That's really important, lays the groundwork for what ultimately consumer spending can be for the month of October. And again, that starts the quarter off. Our view is that it's going to be pretty sturdy. Maybe a little less ebullient than what we saw in the third quarter. We're looking for growth to slow slightly to about 2%. Our view is really kind of that 2.5% to 3% growth is not sustainable going forward. One that was fueled by consumers dipping into their savings, and also really big increases in employment, which you just don't see that continuing. But nevertheless, we could still have very healthy growth, going through the fourth quarter.
Well, Kathy, it's all in the eye of the beholder here. So when we talk about growth or healthy growth, we're talking about sturdy growth. We're talking about the U.S. I'm curious this time around, what does U.S. exceptionalism mean for the rest of the world?
Great question. So, it helps, right? I mean, it's better to have the world's largest economy growing strongly. And it certainly, you could have those trade effects and positive impact, flow through the rest of the world. But, other countries are struggling with and regions with their own issues, right? China growth has been disappointing as they try to see the real estate sector rebalance in a sense and correct. They have been adding a bit more stimulus, both fiscal and a little bit on monetary policy. There may be more forthcoming, probably on the fiscal side. Europe struggling. Really, they haven't seen anywhere near the consumer spending growth we have had in the U.S. I think also the productivity is a real big issue there. If you're really thinking about the medium to long-term drivers of growth, I worry about a stagnant productivity picture in Europe where we don't have that in the U.S. I think if anything, there's productivity has been stronger than many of us thought so far. Now that may ease a little bit, but then you think about the AI and other innovations, probably a brighter spot here in the U.S.
Kathy, how about the U.S. consumer? We'll get some retail sales at the end of the week, as I mentioned before. How do you think the U.S. consumer is doing? I mean, we had this election this week, and it seemed like the economy still a really, really big issue for most Americans out there.
Oh, absolutely. And that said, you look at consumer sentiment and confidence readings, the outcome of the election indicates, dissatisfaction on behalf of consumers, yet they have been spending very robustly. It's really been the consumer driving U.S. economic growth. As Damian said, the rest of the world's not helping. It's not as if we're getting a lot of help on the export side. Housing has been really in the tanker still. Now, we have had some bright spots on business investment related to infrastructure spending, but all in all, it's really the consumer. I think that, there's a bifurcation within the consumer, middle income, lower income, still feeling the headwinds of high prices, right? Even though inflation has slowed, the level is high. Interest rates remain high still. But if you look at, upper income households, they're feeling really quite good, right? Wage growth has caught up to inflation for them. And also the wealth effect, right? Look at the equity market this year, risk assets overall. So I think we on balance, you still see the consumer doing well. But again, it's the moderation is what we expect going forward.
Kathy, thanks so much for joining us. Kathy Bostancic, Chief Economist for Nationwide, joining us to give us her thoughts on these markets. Again, we're going to get some inflation data this week, Damian, CPI, PPI, and then at the end of the week, retail sales.
Yeah, I'm seeing consensus there. It's looking for a little bit of an uptick on the core. It looks like 0.2% on the headline. So, more of the same, right? The core is still kind of running a bit hot here.
Yep, absolutely. I mean, the inflation rate obviously has come down dramatically, but for most of us, we still see the prices that we're paying in the supermarket and restaurants and so on and so forth, so that the prices are higher. Did they come down? That's the question I always have. I mean, I guess if it's a commodity, it'll come down or has come down. But if it's a packaged good, it just doesn't seem like the prices come down. I guess that's how it works out there in the economy. We're going to have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with the new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, how are these markets going to open with Wall Street coming off its best week of the year? We also have more inflation data out this week. CPI Wednesday, PPI Thursday, retail sales on Friday. Let's get right to it. We'll start with the S&P 500 up 0.3%, 20 points at 6,014. The Dow up 0.5%, 244 points at 44,241. The NASDAQ up 0.3%, 74 points at 19,360. We head over to the bond market, which is closed. We move on to commodities. Then we have Brent crude down about 2% at $72 a barrel. WTI crude $68 a barrel. We have spot gold about 2% lower at $2,626 an ounce. Looking at currencies, we have the dollar stronger. We have the Japanese yen, euro, British pound weaker. Bitcoin, look at this, 81,717, up more than 2% at the open. Also want to check in with shares of Tesla. They're up about 7%. That is your Bloomberg opening bell report. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on that internet thing. You go over to youtube.com, you type in Bloomberg Podcast, and boom, there we are. Cam Dawson joins us. She's the CIO at New Edge Wealth. She joins us in our Bloomberg Interactive Broker studio. Cam, this risk-on trade has got some legs here. Are you worried about valuations in these markets? How do we think about how much more we can go on this risk-on trade here?
I think that we have to appreciate in the short term that the trend is still resoundingly positive. And that has been the theme all year long, which is that every time that this market has been challenged, it pulls just slightly back to trend and keeps roaring higher. I don't think that we can ignore completely how stretched valuations are getting. We're trading at 22.6 times forward earnings on forward earnings that do look fairly optimistic. And that 22.6 times is just shy of the 23 times forward that we got to at the peak in 2020 when earnings were depressed and the Fed was flooding markets with liquidity. So it's a question of, does that act as a ceiling, or do we go into rarefied air and trade up to these valuations on some sort of animal spirits positioning chase?
Well, Cam, we talked about that roaring 20s regime. And so, my question then to you is, where do you see the terminal Fed funds rate ending at? I mean, do we see the risk that, maybe the Fed won't cut as nearly as much as markets are pricing in? I mean, is there a possibility that rates could actually be higher by this time next year? Is that something that you guys are even modeling out?
It's been our view that the Fed is not going to cut nearly as deep as what they expected and what the bond market expected just a couple of months ago. Now, it should be noted that currently the dot plot, the one that we got back in September, the market actually has the Fed now cutting less than the dot plot is forecasted. So we think in December we could get a relatively hawkish dot plot where they remove some of those cuts. We've been of the view that this economy is more resilient to short-term interest rates, less sensitive to them compared to prior cycles, which suggests that the neutral rate is higher this cycle, which just means that the Fed, unless we get a sharp weakening in economic growth, is unlikely to cut as much as they think that they will.
So then my question then is, what does this mean for some of these central banks out there? I mean, my goodness, if I look at some of my emerging market central banks, forget about EM, just G10, right? There's a lot of rate cuts priced into places like the UK, the Eurozone, et cetera. I mean, can they continue to stimulate with the Fed kind of, waffling a bit here, Cam? Does that mean we've never seen that before?
Well, certainly as a tale of two cities or a tale of two continents where we have seen this U.S. economic resilience. We think part of that is because of that lower sensitivity to short-term interest rates in the U.S. compared to a place like Europe, and the fact that we've had far more aggressive fiscal stimulus. So what this means is that the Fed has the potential to remain tighter than the rest of the world, and that's what you're seeing within the currency markets. Look at the dollar. It continues to drift higher, and just suggesting that U.S. economic dominance is really being reflected within FX.
Cam, we're pretty much through the earnings cycle this time. What did you take away from earnings and maybe even some of the guidance coming out of this cycle?
Earnings have been resilient. If you look, about 75% of companies are beating on EPS, 60% are beating on revenue. That's all very consistent with prior expectations or prior earnings cycles. What we've also seen is a slight revision higher, with earnings coming in better than what was expected, 5% versus the 4.3% which was expected going into the quarter. So all in, it's been good news. We haven't gotten a lot of guidance yet as to the outlook in 2025, but we would note that the market is expecting a huge inflection in the 493 stocks. They only delivered about 0.1% growth this quarter. The market is expecting that to go to 12% growth next quarter for 4Q, or the one we're in right now, and stay in that low double digits through the remainder of 25. We think that's a big show me story.
Cam, carry trade Dawson, I love what you were talking about with currencies there. I mean, I have to agree with you. If you look at the performance of a carry basket in currencies since the election, I mean, it's up 1.5%.
Now, carry basket of currencies are
high yielders getting long the high yielders and short the low yielders, right? Okay. So, I mean, that's a trade that's worked really, really well in the market for the better part of the last 3 years. I'm talking Mex peso, Japanese yen. And if we're moving back into a regime where we can extend that a little bit more, forget about it. I mean, the search for incremental yield is going to be there. So, Cam, I completely agree with you. And I guess, this is my question. What regime are we really in here? Are we early cycle? Are we late cycle? I've asked this to pretty much everyone this morning. Are we somewhere in between? What are your thoughts?
We've been in the we are late cycle, but that doesn't mean the cycle is ending camp. And we define late cycle as the traditional things that you see before you have some kind of economic issue, which is you have low unemployment that has room to go higher, not necessarily lower. If you look at these long cycle dynamics of fixed asset investment within real estate, those kinds of things are still at their prior highs or kind of cycle highs, which just suggests that this is not an economy that has some big pent-up demand. This is not an economy that has seen a lot of underinvestment, that has a lot of room to run. But that also doesn't mean that the cycle is ending immediately, which is why we're still not making a recession call for 2025. We reserve the right to change our minds, but we're not seeing signs yet that we're imminently dropping into a recession.
All right, so on the fixed income space, if we're not going to a recession, do I stick with my 2-year Treasury at 4.25%, even though the bond traders aren't in today? Or do I take some credit risk here?
Well, you're not really getting paid for credit risk.
Okay.
Last week, we saw the high yield spread dip down to 302 basis points. That's below the lows we got to in 2021, which of course we know was a loose, wide open market. This market is wide open, and that does raise the questions of how much does the Fed really need to ease with financial conditions this loose? So we don't think you're getting well compensated for taking credit risk, because effectively at 302 basis points, this high yield market is saying that there is zero risk to corporate profits, zero risk to income growth slowing down, which just means that you're kind of off sides if you're overextended within credit. But we would note there's still good demand for that credit simply because base yields are so high, and you have this dynamic, as we're seeing all in the market, that there is a reach for yield.
Well, Cam, if we look at factor performance in equities here, a surprise to me, it's not quality, it's not fundamentals, it's low volatility. Low vol has been the outperformer here on the heels of this trade, and that kind of speaks to what you've been saying, right? That maybe valuations are high here. Maybe that's kind of, putting people in more of a defensive mode. Do you see that continuing? Because, every indicator, at least in equity land, VIX at 15, risk on, in my opinion, I see people are actually interested in Tencent and Alibaba who are reporting earnings this week, go figure. So talk to me, Cam, a little bit about, where we are in equities and how investors should be positioning.
Yeah, we have been seeing cyclicals outperform defensives, so that's an interesting dichotomy to see low vol, because typically that is coincident with defensives performing better. Our strategy is one of sticking with high quality. We think that there are times when you underperform. Certainly you have junk rallies and dumpster diving rallies, but through the cycle, high quality names with good free cash flow, strong return on invested capital, good balance sheets, that they are the ballast in a portfolio. So what we continue to look for is names that are trading at reasonable valuations with those characteristics, which just means for incremental dollars, we are looking to places like value with those quality dynamics, mid-cap with those quality dynamics, and being hyper selective to not chase some of the junk and low quality areas that have been leading this market.
So, but I'm just looking at the fixed income space. The best performing fixed income has been high yield, up 8.28% this year. So the high yield market's worked.
Yeah, let your winners ride, I suppose. And that's where we're looking at it today and saying, are we comfortable only getting compensated by just north of 300 basis points for incremental investments? So we actually dropped our strategic allocation to high yield to an underweight, simply because we thought that we were not getting well compensated. We were a little bit early to that trade. We did it a couple of months ago, but we still think in underwriting new capital, new allocations, that you're simply not getting compensated for that risk.
Cam, I just want to pull you a little bit out of your comfort zone. This debasement trade, the fact that gold has had this just amazing rally to near record highs. It's come off 3% on the heels of the election. I'm just curious. Is there more juice for gold to rise in this environment, or have we seen better days?
I think that we have to appreciate that gold in the short term got overbought, flows got extended, futures got also very extended as well, suggesting that positioning just became very long gold, so that it's not surprising to see some of that strength be digested. It's important to think of gold and Bitcoin effectively as those psychological commodities. The idea is that it's less about the debasement actually happening and more about the fear of the potential for the debasement that can drive these prices. And certainly with high fiscal deficits, the Fed potentially cutting rates further, you can see why people could be concerned about that.
Cam Dawson, thank you so much for joining us. Cam Dawson, she's the CIO of New Edge Wealth, a proud graduate, and I think a double graduate of Rollins College down there in Winter Park, Florida, just outside Orlando. So we appreciate Cam coming into our studios with our news in New York City. Here's John Tucker.
All right, guys, President Biden will host President-elect Donald Trump this week at the White House for their first post-election meeting. Let's get more on this report from Bloomberg's Charlie Pellet.
It sets in motion the transition of power that will be completed in January. The Oval Office meeting will come Wednesday morning at 11. Last week, Biden pledged to help ensure a peaceful transfer of power in January and called for healing divides in a politically polarized nation. In New York, Charlie Pellet, Bloomberg Radio.
And President-elect Trump has named Tom Homan as his border czar, the former acting ICE director, who was the face of zero tolerance in the first Trump administration. Trump has also picked New York Congresswoman Elise Stefanik to be his UN ambassador. Republicans 5 seats away from reclaiming their majority in the House and pulling off a clean Washington sweep. Arizona Republican Dave Schweikert's race is the latest to be called in the GOP's favor. And the Kremlin denying a Washington Post report that Trump spoke with Vladimir Putin last week. The paper says the president-elect urged the Russian leader not to escalate the war in Ukraine in a call 2 days after the election. FTX filed a lawsuit against Binance Holdings and its former chief executive, seeking to claw back almost $1.8 billion it alleges was fraudulently transferred by now jailed founder Sam Bankman-Fried. The lawsuit is one of many filed by FTX against its former investors, affiliates, and clients in the Bankruptcy Court of Delaware. Other defendants include former White House communications officer Anthony Scaramucci. A United Nations climate negotiations start in Azerbaijan. The chief issue is who must ante up to help poor nations, and especially how much. But this year's talks, known as COP29, won't be as high profile as last year's, with 48 fewer heads of state scheduled to speak. The leaders of the top 2 carbon-polluting countries, China and the United States, will be absent. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Paul, Damian, Lisa.
All right, John Tucker, thank you so much. We appreciate it. All right. He has badged in, Eric Balchunas has badged into the building. So that's order number 1. So he will be here at 9:45. We'll talk ETFs. So that just means that Acela is running on time, Amtrak is running on time, and all is good with the world. Because you never know, because with they got this bridge there, John knows all about this, in the swamps of Jersey. It's like 500 years old, this bridge. I mean, it's wooden bridge. And sometimes it doesn't open or close, and then all the trains in the Northeast are all screwed up.
There'll be the Portal Draw Bridge, which they're doing a wonderful job of.
Yeah, but Eric will just call it. He'll just call a chopper, and he'll just
That's right. You get the
34th Street helipad.
The ETFs.
There are always excuses.
The helicopters. But anyway, Eric's here, so we'll be talking about it. That's actually, I mean, the ETF business, the growth of ETF has just been unbelievable.
And it goes further. I mean, you look at BCred and all these other products, which are just give investors access to some of these asset classes. It's just amazing.
It's a great thing for the individual investors. Well, Balchunas is coming up in just a moment. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I am Lisa Mateo. Stocks extending their post-election advance and the dollar on track for a one-year high. This as this week's major economic indicators turn to inflation, consumer spending. Let's start with the NASDAQ. Right now, shifting down 0.1%, 16 points at 19,271. The Dow up 0.9%, 399 points, 44,391. The S&P 500 up 0.1%, 11 points, 6,006. We head over to the bond market, which is closed for the holiday, so that from there we move over to commodities. We have spot gold lower, down 2% at $2,623 an ounce. We have Brent crude down 2% at $72 a barrel. WTI crude at $68 a barrel. Want to turn to Bitcoin, rallied past 82,000 for the first time. Right now, Bitcoin is at 82,183. Crypto-sensitive stocks like Coinbase this morning up about 12%. And then we have MicroStrategy, that's up about 10%. Shares of AbbVie, they are falling down 12%. It's the biggest drop since September 2021 after its schizophrenia trials fail. And shares of Cigna, we have up 6% after it said it will not pursue a combination with rival insurer Humana. We have Humana down 2%. That is your Bloomberg Business Flash. Paul and Damian.
All right, Lisa Mateo, thank you so much. We appreciate that. Damian Sassower doing yeoman's work sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Philadelphia has this thing on New Year's Day. It's called the Mummers Day Parade. As a little kid, I grew up watching this on Channel 6. Eric Balchunas, you do the ETF stuff for BI. I could care less. What is a mummer, and what's the Mummers Day Parade in Philadelphia? This is a huge tradition down there.
I don't know if I could define a mummer. I just know from living there, I almost feel like mummers are like if the audience was the parade. You know, they're usually a little tipsy.
Yep.
They're, kind of stumbling down the street. They've got signs. They're very creative. It's a little ragtagish. So, because there's a juxtaposition with the Rose Parade, which is so formal. This is like if a bunch of Philly fans decided to have a parade every New Year's Eve or New Year's Day. That's sort of what it's like. I like it. It's got a nice haphazard energy to it. I've come to really appreciate it, but
it is fun.
It's not the Rose Parade. Nothing like it. Maybe the
opposite. So folks out there that you're not in the Philadelphia area, go Google Mummers Parade. Check out some of the video. It's really amazing. But it's totally a Philly thing.
Well, Eric, I'd like nothing more than to ask you about the Eagles' dominant victory over the Cowboys this weekend. But instead, I'm sitting here and I'm rebalancing my equity index ARB portfolio. And I'm looking at names like, I don't know, Franklin Resources. I'm looking at names like Paramount. Paul Sweeney here is telling me he's not going to subscribe to Paramount. Talk to us a little bit about what's going on, at the low end of some of these indices and the rebalancings that we can expect into the end of this year. Is there going to be a lot of movement there?
Yeah, it depends on the index, right? So market cap weighted indexes are going to let these big stocks keep riding. That's why the Mag 7 makes up a ridiculous amount of the Qs and SPY. But where the rebalance, and some people like this, is an equal weighting and smart beta, which are fundamentally driven. Those are going to keep rebalancing into sort of smaller, large caps, more value stocks. And we have Rob Arnott on the TV show today. He would tell you that's what you should do. But people have been telling you that 100% ago. So I don't know. Is this how much? Because I'm looking at the flows here. The top 5 flows: SPY, Qs, IWM, which is small caps, VOO, VTI. 4 of those 5 are Mag 7 heavy. Yeah. So if all the flows are, and these are really big flows. These are like mega Trump size flows here. We're talking $58 billion in a week.
Yeah. I was taking profits on my underlying, which is why I was going long the index funds, just as a hedge naturally into the election. So, no, I'm just kidding. But no, seriously, the flows that you're seeing, forget about equities. Let's look at fixed income here, right? Short duration, high yield. Does that still work?
Sure. It depends. Fixed income, you got to choose your battle. So HYG, by the way, is on the list. It's the top flow getter since the election.
There you go.
But there's also some people hiding out. Shy is in there. That's short-term trades like cash.
Yeah.
TLT is interesting. I call TLT a siren song for people who think too much. Like, you think you're going to outsmart the Fed. Well, Trump's going to do this. The Fed's going to do that. And then, this moon will be lined up perfectly and TLT will go up. And it's basically like lured all these people to shipwreck over many years. Now, you have a month or two where it spikes. And if you catch that, you're in looking good. But TLT at 1.4 billion. It's interesting, if rates do lower quickly, you're going to win, but that's yet to be seen. Obviously, Powell says he's not going anywhere. So, there's still some questions there, but that's what people are doing in the bond market. But they still buy the ag. The ag is third on the list of flows. And, the ag is just the 40 in the 60-40. And I'm not a huge fan of it being the total core because it's weighted down by treasuries. And most active managers would have a little high yield or a little international, take on a little more risk. So to me, I like IUSB, which is like the ag, but with like a little extra international and high yield. It's more like beta to a bond manager than the ag, but the ag still dominates.
ETF investors, they were buying right into the election, weren't they? They were taking risk. They weren't hedging, were they?
Yeah, no, they were, they're, I don't know if it's numb or smart, but ETF investors over the last 15 years have been rewarded for doing nothing. And so they are totally immune to scary headlines now, or even their own fears. They just keep buying because they've seen many times. If you've ever gotten scared and moved your money to cash, you've lost.
Yep.
So they bought right up until the election. It's like they were on a different planet than the headlines because we thought there could be some drawn out, the results wouldn't be known. And that's a pretty big catalyst, possibly negative catalyst event. And they didn't care. They just kept piling into equities. And then the election hit, and they just piled more into equities. The trading crowd got involved, and so you have this explosion, which is interesting to me because the S&P was already up like 25%. You're only supposed to get 9% a year from the S&P, so you're already like 3 times, and that just pushes it higher. So, look, I don't know. I think if you're a calculating person with a couple CFAs and you're looking at this, it's just so hard to keep buying into it. But that just seems to be what's working, and I'm not sure what the answer is going forward.
Eric, talk to us a little bit about this Bitcoin ETF. I am hearing all sorts of things about it, but the volumes speak for themselves. I mean, people are really buying this up. I mean, is there, is this real? Is this real?
It is real. Like, I know, I get it. Like, I've had this theory on Bitcoin. If you don't have any issue with the debasement of a currency or the national debt, you probably don't understand the point of Bitcoin. You're like, I don't get it, don't need it. But if one of those two things worries you a little, and you think maybe the real returns are not going to be as good as the returns on your screen, then Bitcoin is really going to appeal to you, just like gold. But to me, Bitcoin is gold with benefits.
But you just said that, just like gold, but you can't say just like gold because GLD right now is down 2.4% on the day. I mean, I know it's early going, but I mean, gold is going the other direction.
Gold, I kind of admire gold. It is a true punk rocker. It is zero correlation. Bitcoin is positively correlated to stocks. It's more like that's why to me, Bitcoin is like young gold. I mean, it's literally 16 years old. If you know any 16-year-olds, they're got attitude, they're volatile, and right now because everybody has these boring cheap beta cores, they're looking for a little excitement. So to me, you get the store of value, the currency debasement hedge, plus the hot sauce aspect of it, and I think that's why it's real and is selling and will pass gold, and we think maybe even double or triple the assets in gold ETFs.
Wow. What's the flavor of the month in your ETF?
By the way,
world?
good thing Tom wasn't here to hear that.
Yes, exactly.
That would have his head would have exploded.
He might be dialing in soon. What's the flavor of the month for you on ETFs these days? What's getting your attention here? Or getting your attention?
Look, I've been a fan, and I just wrote about it again. Is the uranium ETFs?
The what ETFs?
Uranium.
Okay.
Yeah.
All
no,
right.
I know. You're like yellow cake.
Yes. What am I doing?
So basically, we call this green investing for realists, because if you look, and we have this new theme that the AI theme, uranium's a backdoor way to play it.
That's right.
Because these
power.
companies,
these data
Amazon,
centers need power. Yeah, they need nuclear power. Exactly.
AI takes so much energy, and now these big tech companies are buying their own little micro reactors. And so if they're into it and they're like the smartest people in America, it's going to help the sentiment for others. And these ETFs there's been a couple of them that come out, but they're now, I think, $7-8 billion. They just passed clean energy ETFs in assets. So now uranium ETFs have more than clean energy. Isn't that interesting?
That
Although
is. Yeah.
You could argue they are clean energy, but
right.
In many databases, they're not actually categorized as clean energy. But I think ultimately they will be adopted by clean energy, and they should. It is clean energy. It's just got that sort of like high tail risk that freaks people out.
All right, Eric Balchunas, always appreciate it. Eric Balchunas, ETF analyst, Bloomberg Intelligence, proud rider of Amtrak from Philadelphia to New York. This is Bloomberg. Good morning.